All right. Hello, everybody. Welcome to the official Tesla Q2 2024 stream for Q2 earnings. This is going to be a very exciting earnings. We have about 30 minutes until the results go live, probably at like 4:05-ish. I think it officially comes out. So we're going to spend the next 30 minutes trying to understand and grasp the gravity of what these results need to be in order for Tesla to pump even more than it has since 138. I'll have a guest joining me in a little bit. Neil, Couch Investor. You guys might know him. He'll be on the stream. And we'll be talking about what happens with Tesla. And he's actually here right now. Neil, what's up?
Hello. Can you hear me all right?
I can hear you very well. And I think we're live on your
setup.
channels. Yeah, so we should be good to go. This is going to be really exciting. Neil and I were here 2 months ago, when we had earnings, and the tone was a bit different. And one of the reasons the tone was different was because the stock was not as up as it is right now. Currently, stock is at 248, down a little bit as we get into the stream. Last time we met, it was this day, Monday, April 22nd to April 21st, we had earnings. Stock was at 142 and we bounced up all the way to 194. Then we went kind of sideways. And then Tesla ended up going on its run. So we've got a lot to talk about, a lot to discuss, a lot to dive into. Got 30 minutes until this earnings call or earnings results come out. And then at 5:30 Eastern, we actually get the actual call. Outside of just Tesla, we do have Google, Visa, and Enphase after hours. Obviously, Google, the most important one out of those three, along with Tesla. So there's going to be a lot to talk about when we get into the market close. Neil, how are you feeling going into earnings?
Good. I mean, with Tesla, the last time we talked, expectations were much lower, and at least I was completely wrong with the prediction. I thought it would go down, but it went up because we also got some unexpected news about the next generation platform. So, okay, let's see if they can surprise us yet again. Google, I think they'll do fine. Valuation-wise, I don't think it's expensive. They're not going to buy Wiz, so I guess they have $23 billion to spend on something else now.
Yep. Yeah, I think Google will talk more in depth and see kind of what we've got going on in the context of Google. But the really interesting thing about Tesla, and I just put a poll in the chat, guys, Tesla pumps or dumps. What are you guys thinking? I think the unique thing about Tesla is that it bottomed at 138, and everyone, including myself, was pretty bearish at 138 because all we could see was bad news. Fundamentally, since that sort of decline we had in the stock, almost 43% year to date, not much has changed, right? Like yes, we got FSD that came out, FSD 12.4, and that's good. Energy shocked a little bit to the upside in the delivery report. And yes, the deliveries did beat, even though they're still down 15% year over year. But fundamentally, the numbers are going to be down in terms of EPS, 32% year over year. Revenue is going to be down 2% year over year. This is not a company that is actually growing at the top line or at the bottom line. But what has changed is the idea that FSD is going to become real, that robotaxis are going to become real, and that the company will transition from selling cars to selling rides. So, Neil, that's my first question to you. Do you think that transition is adequately priced in the markets, given we ran from 130 all the way to 250?
Well, I agree with what you're saying, because fundamentally, it has not become much better, right? We don't know if margins have bottomed. We don't know we know that energy is doing very well. And that's, I think, one point that the market has started to acknowledge a little bit. It's the energy side of the business that is growing fast, has high margins as well. And then, yes, there are definitely some analysts that have maybe switched their tones a bit more positive on the AI robotics side of things. Although, let's be honest, until it has a material impact on the company, I think we still have a long, long way to go. So right now, still, the main focus for Wall Street is still going to be on the automotive side of things. Margins, have they bottomed, yes or no? And then energy, how fast this is growing, and potentially some information about the robotaxi event and the launch of the next generation platform.
So what is your logic for this run-up that we're looking year to date? Or not year to date. Let me do year to date. We saw the stock go from basically this level all the way down to 138. And then kind of out of nowhere, it flew to 270. Now, Elon did get paid. We forgot to mention that. He got the compensation package. But that doesn't, if anything, that just dilutes shareholders, right? That just guarantees he's not leaving. Why do you think 138 to 248 happened? Do you think that was institutional? Do you think that was retail? Or do you think the big guys know something that the rest of us don't know? And on this earnings, we're going to find out what they knew a couple of months ago.
Yeah, so I think it's a combination of everything that has happened. Elon's, the shareholder meeting, the vote passing, both of the votes passing. Although I still think it has to go in front of the judge and she has to decide on something, especially with the lawyer's part of things. So I think that story is still undecided, but I mean, yeah, we'll see what happens with that. But overall, at least that's off the table a little bit. The comments of the next generation platform may be coming later this year, but probably early 2025. That was also a surprise. So Wall Street likes that as well. Plus, yeah, maybe institutional investors are now feeling a little bit more comfortable investing in Tesla since everything has to do with AI, and they might be one of the few companies that can actually monetize it through selling cars, through energy, robotics, and stuff like that. But I would say that the main shift would probably be that someone knows something with regards to interest rate cuts, because that's going to help selling more cars, plus the EV sentiment, because the first half of the year, EV sentiment wasn't great. Switch to hybrids and ICE vehicles. Now maybe we're seeing something better, plus the China story. And then, of course, there's elections, so a lot of things can happen towards the end of this year. So, yeah, we'll see. It's quite interesting because the switch has been made so fast. I would not have guessed that we would be at 200 and something right now.
Yeah, if you told me 2 months ago Tesla's going to be at 270 or 248, hit 270 for a second, 248, I just wouldn't believe you. Which is why if you bought the calls for 270 in July, you've made a lot of money because no one believed you. But this is pretty incredible to see kind of how it played out. And as you said, China is an issue. It's getting better, but that's still an issue. FSD, the clarity on that's going to matter. And then obviously robotics and when that becomes real. What do you think Elon talks about that distracts us from the crappy numbers if the numbers are crappy? Is it Optimus? Is it FSD? Is it Trump winning? Like, what is he going to talk about?
Well, he will always say the same thing because I'm pretty sure that an analyst will ask the same question again. So he's going to say this is an earnings call, not a product reveal event. So he's not going to say much on probably he will probably say Optimus will be working at the factory next year. Okay, that's something that he can say, but probably nothing much on the robotaxi event. Still reiterating the same thing. Next generation platform is coming early than expected. Probably early 2025, maybe late this year, but I'm always overly optimistic, blah, 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 the usual Elon Musk stuff. So yeah, hopefully he can give us more information on what they are seeing with regards to EV sentiment. Are they still seeing a huge switch to hybrids and ICE, yes or no? I mean, in recent weeks, China has done quite well. The China weekly insured numbers are doing better than expected at the start of this quarter. So at least there is that. Maybe some information on the Megapack factory in Shanghai. That would be great as well. So yeah. And then he will always talk about something that doesn't really matter during the call.
Yes.
Like talking about something seriously and then whoops.
Gets into a little philosophical ramble. Yeah, last time I think he saved the earnings call by saying FSD is on the way. They also said the Model 2 essentially is the Cybercab, and that it's coming out early, or not early, but June 2025, first H1 versus H2. So if they can reiterate that, I think that would be exciting. Now, do you think we get an update on the robotaxi event? Alleged robotaxi event?
Yeah, I think he'll say what he tweeted out. Probably the reason why it got pushed for what is it, October or so?
October, yeah.
But nothing extra in my opinion. Just the reason. It's a good reason. I mean, it's 2 months to get a better event, so why not? I mean, when the event was announced, it's not like the stock has moved that much because of that tweet. Or did it? I don't know, but we'll see.
So Miguel here says in the chat, institutions are going to pull the rug today, dump incoming. And then someone else says, unless they say robotaxi is ready, this is going to dump. The only hedge I have against this argument about a dump is that I don't know how Tesla goes from 500 billion market cap to 800 billion in less than a month, based on this idea that institutional investors, which obviously led to that 300 billion increase, would decide to pull the rug right at any signs of weakness. I mean, like, there's just no way they would have the intel to buy unless they thought something good was going to happen, at least by the end of the year. So the idea that the rug gets pulled, to me, I don't know. I think maybe we have max pain around 220. I think that's possible. I think that would be tough to see, but that's possible. But I would say institutions know something, and maybe they don't. Maybe this was a retail pump to 300 billion in market cap, but I don't know. I don't think so.
Yeah, I mean, retail is quite strong with Tesla. So we'll see. And Jose here saying something that we missed. Elon also mentioned a query thought about potentially using unused car power for AI inference. Yeah, probably going to mention this as well, and saying that this might be $100 billion business if it works out. It's a long shot, but the chances of it happening still small. Blah blah blah. So yeah, I agree. But yeah.
do you think we'll get a broader update on Dojo also, or is that kind of not relevant?
I mean, it would be great. Do I think we're going to get an update? No. I think Tesla has to do some extra events during the year because they have so many projects. I mean, an event could be useful. I mean, we know we have the robotaxi event, but maybe when we had the battery day, could be a Tesla AI day as well, when they show us maybe some progress in Dojo, 4680 progress as well. That's probably something that we're going to get during the call as well, a little bit. But yeah, lots of long shots. And in the short term, what matters is definitely selling more cars for Wall Street, selling more cars at a profit, energy still going up, and then some progress with regards to the next generation platform, AI, robotics, stuff like that.
Agreed. All right, so market's taking a little bit of a hiccup right now as we get into the close. We were at 556 on the daily today. Now we're at 553, so we almost touched 557 on the S&P. So the S&P's down. CrowdStrike giving up some of its gains. It was at 276. Now it's at 269. Rivian, that's up a little bit. PayPal is down. SoFi's down. Palantir was touching 29. Now it's back down a little bit, 28.85. Small caps, are they giving back any of their gains? They are they're still up 1.15%. Neil, any opinion on the sort of Tom Lee thesis that the large caps have run and now it's time for other sectors of the market to gain momentum?
Yeah, but I saw a video today where he talked about on someone's podcast talking about the earnings potential of the S&P 500, I think.
Yeah.
And I think he's correct. I think the big guys are going to become more and more profitable. People are going to see that, why should I invest in riskier business if the big guys can still become bigger and bigger, take more market, become more profitable, and have maybe better returns as well, less riskier returns, I would say. But small caps definitely have some ways to run. I mean, there are plenty of small companies that have been completely forgotten, and okay, rightfully so. I mean, some of them are unprofitable, and in a high interest rate environment, that's not really the right environment to be a small cap that is unprofitable, despite them growing faster than the average company, I would say. But yeah, I mean, the rally has definitely been with the big guys and AI players, and less with the smaller ones. But to see a real rally, I guess, comes after the rate cuts, I would say.
Yeah, I would agree. And I think that rate cut, we got housing data today. Most expensive houses we've had in a year, and lowest number of sales in a year. It seems like it's inevitable that we're going to get a rate cut in September. And hopefully that rate cut is into strength, or it's going to be into the economy weakening, but hopefully it's not like the economy collapsing. Yes, like not a recession, exactly. So Jose says, Neil, I don't follow energy market for Tesla. Any thoughts on energy solutions being used in these AI data centers as power becomes somewhat of a bottleneck? Again, I don't follow their energy. So this big argument is evolving in the broader investing landscape around energy that AI, if we make this 100 trillion parameter LLM, it's going to need energy. Is Tesla a winner there, in your opinion, with energy?
Well, I would guess yes. I mean, they are deploying megapacks each. I mean, there is an announcement, I feel, each and every week, or actually 2 weeks. Every big player country is going to need lots of computing power, lots of AI use. So where do you get the energy from? And if you're looking for a company that can address all of those things, then I would say Tesla could be should be a big winner as well. I mean, they need it for their own stuff. So selling for other companies would make sense, because it's going to consume so much energy in the future that you would need a solution that can help you. Otherwise, it's going to cost you way too much and you're going to be energy constrained, which I doubt it's a good thing for any country and any company as well. So yeah, I would definitely say that Tesla should be a big winner in there. Is it the only one? Probably not. Probably not.
Yeah, and we're looking at the deliveries numbers we got a couple weeks ago. So 444,000 vehicles. That's ahead of expectations, which was nice to see. And then 9.4 gigawatts of energy storage products in Q2, which was their highest quarterly deployment ever. So if those numbers surprise to the upside, then that's obviously going to be better than what the market expected. The market is looking for, as soon as we get the numbers, 62 cents of EPS and 24.73 billion of revenue. Revenue will be down 2% year over year. EPS would be down 32% year over year, but that's baked into the expectation. So as long as Tesla slightly beats on those, not too bad. Last quarter, they missed on EPS by 11%. So they reported 45 cents versus 51 cents, and they missed on revenue by 4.6%, 21.3 billion versus 22.3 billion as well. I think the other thing is the APR and the financing of 1% and 2% that recently came out. That should help with the deliveries. That obviously helped with the delivery numbers. Might continue to compress margins, but I think at this point, Wall Street just wants to know people are still buying EVs, and we're not in a literal EV winter at this point.
Yeah, but if you looked at, you can see the production number is lower than the deliveries, which means inventory has come down, which should help as well, because the cost of producing them were from last quarter or 2 quarters ago, I don't know. So that could definitely help the business. But Elon did say that free cash flow should be positive. I mean, the trend should be towards free cash flow positive, because last quarter that was not the case. So we'll see what happens this one. I'm sure they're going to recognize maybe some more FSD and more energy for this quarter, because again, I still don't know how the timing of that works. I don't think anyone knows. So that could help them for a quarter or two. But yeah, we'll see. It's going to be interesting. Obviously, the report will not tell us the full story. We'll have to wait until Elon starts telling us a different story in the earnings call, and then we'll go from there.
So in the chat, we have the pump or dump poll. We have 55% say pump, 45% say dump. Neil, do you think $247 is a fair price to pay for Tesla, or it's overvalued right now?
It's not cheap. If the numbers don't improve that much, let's say, compared to what we got the last quarter, and the expectations for this one, then of course it's not cheap. But if you think about Tesla in the long run, then yeah, I mean, if it is successful with the next generation platform, with robotaxis, with Optimus, Dojo, and all of that, then of course it's cheap. But again, it's not going to happen tomorrow or next week. Me personally, I haven't bought Tesla the last couple of weeks.
What are the odds Tesla bought Bitcoin on the balance sheet this quarter?
I don't think it would be smart for them right now, because the sentiment around their profitability and things aren't great.
Yeah.
So them now buying Bitcoin would not be the smartest thing to do. But I mean, you never know.
So we got semis taking a hit as well today. AMD is down, Nvidia's down, ASML. Broadcom's up a little bit, 2%. ARM is up. Wow, ARM's up actually up. I think they got an upgrade today. They're up 5%.
ARM is crazy. I don't understand this.
I think it's the most overvalued company.
It's insane. I mean, it's a great company, don't get me wrong. But what's the market cap right now?
200 billion? 279, basically.
200. Well, for a company that generates $4 billion in revenue a year or something?
About 3.2. But the thing is, a SoftBank controls 90% of the shares, right?
Yep.
And so that's the squeeze they're playing out. Also, for those that don't know, SoftBank sold a 5% stake in Nvidia for $3 billion back in 2019. That would have been worth $165 billion today. So Masa-san, the leader of that fund, he's pretty upset about that, and he's vowed to make ARM his next Nvidia. I mean, maybe. Maybe if Nvidia keeps pumping, maybe ARM goes on as well. Okay, Google. So we got 9 minutes until the bell. We might get Google before Tesla. So actually, I'm gonna make a watch list right here while I ask you this question. But in general, do you think Google is going to have a strong earnings this time?
Yeah, I think so. I
Do
think
you
so.
think cloud is going to lead the way, search, or kind of how do you think they navigate this? Because the stock is up 32% year to date now.
Yeah, finally, because they did not start the year on the right foot. But no, I do think that, I mean, we should continue to see a strong growth with the cloud business. It becoming more and more profitable. That will definitely help them. YouTube should be good, although don't expect the same growth with YouTube, even though it can still grow quite fast. It is already quite big. Advertising, I did see some comments, I think a week or two ago, that there was a little advertising dip in the quarter. So let's see if that affected Google Alphabet that much. But now overall, I'm still expecting them to have a pretty good quarter with some cost cuts there as well. So probably free cash flow close to $20 billion for the quarter, I would say.
Yeah, the thing about Google that's interesting is that they've pumped a decent amount this year. They were slow to get started. They had kind of the woke Gemini controversy stuff that turned out to be an incredible buying opportunity, and so people that got their toes wet at 131, they've done well. The LLM threat to kill their business, I think, was a fun narrative that is now non-existent. LLMs are not destroying search, and it's just so crazy, right? How the market revolves around narratives. For like 3 weeks, everyone felt, including me, LLMs were going to ruin Google. It's like, no, that was never going to happen. If anything, it's going to be a propellant to the business, and they just saved themselves $23 billion from giving to Wiz. So, any thought on how that potentially helps shareholders feel a little bit more confident in the cash reserve they have?
Yeah, I mean they're also paying a small dividend. They're paying a
Oh yeah,
dividend
I
and
forgot.
and buying back a ton of shares. So yeah, I mean, if they were willing to spend $23 billion on Wiz, which was lastly valued at $12 billion, then they're definitely looking to buy something in the market. They have, I mean, like I said, I expect $20 billion in free cash flow for this quarter or around that number. So $23 billion to acquire Wiz, which is a tremendous cyber company. Still very young, but I mean, that's what, a quarter of free cash flow, big deal, right? For a company like Google, another quarter or two, and they made it back and then some. So yeah, profitability wise, I don't think that there is a there is a problem there. The LLM stuff, AI, it's a question for the next coming years. How are you monetizing your LLM chatbots and stuff like that? Are you going to talk with ChatGPT, Gemini, and all the others, and suddenly you have some ads popping up? I don't know, but the notion that the 10 blue links have been the same for the last 20 years, that's not true either, because if you go on Google right now and you search for something, probably the first thing that you see is already half an answer without the 10 blue links. So search has changed, and yet Google continues to generate more revenue and more profits.
Yeah, and it's just, I don't know. I feel like sentiment has changed as well around Google. People thought they weren't innovating, they weren't trying stuff. They kind of let ChatGPT get ahead, but I don't think that's happening. I think they did what they had to do. They got in front of everything that was going on from an AI perspective, and now they're here, up 30%. The PE is a little up there. Forward PE is cheaper than all the other Mag 7, but historically its PE is about 23, 24. Right now it's currently 29. HIMS is up 10% on the day. This got a FTC investigation on Friday and it closed down like 8%. No clarity on why they got the investigation or anything. So it seems like maybe it was a nothing burger, and the stock back at 2265 on the year. CrowdStrike at 269, Rivian 1751, Ford, or that's not Ford. Ford was actually down today as GM was down. Oh, what do you think about that news with GM? They're indefinitely suspending the
cool
creation.
robotaxi thing.
Yeah, like that's kind of bearish for robotaxis in general, or is that bearish for just GM?
No, because they still have the normal cruise thing going on. But yeah, to be honest, it's probably a money thing because they can't handle all of it. Let's be honest. It's a shame because it looked pretty cool. So yeah, because cruise, like Waymo, are still going to be a thing, which is also funny because every time I see a comment like, "Oh, Tesla will have a regulation problem," I mean, Cruise and Waymo are driving each and every day, right? I don't know. I've never tried one, but you probably have. You've probably seen them. It's real. They exist. So if they exist, I don't see why Tesla robotaxi could not exist, other than maybe some people not liking Tesla using just vision and not all
Right.
the radars and sensors that Waymo and Cruise are using. But okay, if the data tells you that it's safe, then you'll have to go with the data.
Okay, we got 4 minutes. Are you kind of nervous? I don't even have that big of a Tesla position, and I don't own any Google, but like I'm still, because I think this affects the market. Like if Tesla and Google tank, I mean, I don't know if
A
Nvidia
Google
may.
tank, yeah, a Google tank would be because Google plays in the advertising and cloud, so it
Yeah,
would definitely hurt all the other advertisers plus Amazon and Microsoft as well. But I don't see why they would tank because there is definitely some momentum with especially with cloud, I would say. But I've been wrong before, so we'll see. But yeah, my question to you actually, what do you think about the whole CrowdStrike situation? We still have 3 minutes left, so.
I've been doing a lot of research on this. I dipped my toes. I bought 5 shares at 300. I want to get another 5 shares. And honestly, I'm thinking, what if this becomes a big part of the portfolio, not a big part of the portfolio, but a decent part of the portfolio over the next decade? Because the more I've done research, and usually when you buy a couple of shares of something, you start doing more research. Cybersecurity is big. It's very big. I think Wiz choosing not to go private or not to get acquired just means they understand how big the landscape is going to be. The thing about CrowdStrike that I found out today, even at 269, which I know is still a bit pricey, you're paying a premium valuation, it is the cheapest it has ever been on a price to sales basis since 2019, since they went public. So like this stock is always traded at a premium. It's going to be very difficult to get it at a discount to the premium that it gets even after this 35% collapse. So I think people waiting for 200, it's possible if the lawsuits get really bad, which I think definitely could happen. And that's why I'm not eager to jump in again after buying at 300 because maybe there's a little bit more downside to see, but it's the cheapest it's ever been. And so the question is now, how bad are the lawsuits? If they're not that bad, then I think it's definitely worth looking at because you just don't get companies like this in a bull market. And if we're in a sort of secular bull market over the next couple of years, it's going to be hard to find something this cheap right now.
Yeah, no, I agree. That's the thing. You don't know how bad things will be, how big of a hit they will take, insurance wise or just purely compensation wise as well. I mean, it could get very, very bad, but then again, I don't know. Cyber insurance is still quite young, so I don't know what they have in their clause. We don't know. We don't know who's going to pay who. So yeah, it's interesting. The valuation was, yeah, compared to its 5-year mean or whatever, how long they've been public, like you said, it is much cheaper. It's a bit like the trade desk, same thing. It's never cheap. Plenty of companies are never cheap, and yet people buy them and the stock goes up. So
yeah, it's like asking for Palantir at like $17 again, which might be quote unquote fair. It's like you're just not going to get that, right? So asking for CrowdStrike at 150, 170, that would probably be the terminal fair value, but it's going to be hard, to get there.
Yeah, no, I agree. I mean, for Wiz, for the guys at Wiz, I do hope that they made the right decision and it's not going to be a Snapchat 2.0. Because I mean, $23 billion is quite a nice exit, especially if you started your company only 4 years ago.
That is correct.
That's crazy. I would have said yes without thinking twice. I mean, $23 billion in 4 years.
It's a decent amount of money. It was only 4 years. That's the fun part.
That's crazy.
All right. If you're new to the stream, we do something at 4 p.m. We ring a bell. So, ladies and gentlemen, the stock market is now closed. All right. Markets are closed. Here we go. It's time to get a little jittery. We got Tesla, Google, Enphase, and Visa on the bell. Let's see what we've got going on. So we should get, I think the results come out like in a couple minutes sometimes, but Google is usually pretty quick.
Yeah.
So I think we would get Google first, and then we probably get Tesla. Google's slightly green, very small green candle, but nothing significant. If anyone gets the results before us, just copy and paste it into the chat. I will. Oh, hold on. We had some breaking news. OpenAI removes head of safety, Alexander Madry. Okay.
Didn't know they had a head of safety.
Seems like Elon keeps on being right about this whole OpenAI thing. So I think he was probably on their board of directors, but okay, so that's some news for OpenAI. Is Microsoft affected by that at all? Let's see. 444. No, nothing with Microsoft there. All right, nothing yet on Google, nothing yet on Tesla. I'm looking. I don't have any results on Google or any results on Tesla yet.
Nothing.
Oh boy, this is the fun part about being an investor. These are the most, like, the whole world is spinning and you're just sitting here looking, refreshing this
For
IR
numbers.
page. You're just hoping for some numbers to make sure you don't lose a crap ton of money. Visa and Enphase are not out either yet. Well, Visa is up a little bit after hours. Let me see if I get those numbers. But so far, I don't have anything. Enphase will be interesting too, because we're getting into a rate cutting cycle. So I would imagine we see some momentum there.
Yeah, the guidance last quarter they gave guidance was, I think, a little bit better quarter over quarter, but I mean, still nowhere near what they were before.
Yeah. Okay. Google's green. Google, we got a green candle. We're up 1.32%. That might be nothing yet. I don't have results. I don't have results on Google yet. Google. Okay. Someone told me. Someone said the earnings are out on Twitter, but I don't have the results. Oh, we got a red candle. Yeah, that was nothing. That was kind of just like algorithms. A lot of these are algorithms right now before. Okay, now we got results. Here we go. Up 2%. Never mind. We're down. Red. Down. Now we're down at 1.5, 1.1. Nope. Now we're going green. Now we're
I feel like down. I'm back in Vegas.
Literally. Okay, now it's down 2%. Now we're tanking. Now we're at 3%. 3% down. No, never mind. No, now it's 2.7, 2.1, 1.2, 2.7, 2.8, 3.3. We're actually down 177 on Google. 4% down. 4.2. Okay, the numbers have to be out on Google. Numbers have to be out. I don't have them yet.
Yeah, there is. I'm just write the ticker in on X. There's always some account that already has the numbers. I don't know how.
Tesla's down 1.3. I don't have the Tesla numbers yet either. If you guys have in the chat, let us know.
So apparently Google, they beat on. Yeah, they beat both, but not by much, and announced a cash dividend of 20 cents per share.
Wait, what was it before the dividend?
10 I think it's the same. It's just reiterating the same thing.
Oh, here we go. So Google 189 versus 185, sales 84.7 versus 84.2. That is a very crappy beat, but it is a beat. There you go, folks. Google 189 versus 185, 84.7 versus 84.2.
Yeah, but I'd love to see the I don't get how people get. Okay, it's up if you go on Google's.
We got Tesla. We got Tesla earnings as well. We got Tesla. Okay, I think we have Tesla. Then we'll do Google. Q2 EPS 42 cents. That's very low. No, 52 cents. 52 versus 62. Here we go. 2Q revenue 25.5. That's a beat on revenue on Tesla. 2Q adjusted EPS 52 cents low. So they missed EPS by 8 cents. They beat revenue by 1 billion, or a little bit less than $1 billion. That's pretty boring. Google's green now after hours. This is boring, bro. Where's the swing to the where's the 10% up or down? What is this nonsense? This is not fun. We're in the part of the year where everything's just going to be flat now. This is so boring. Yeah, Tesla's flat after hours.
They're waiting for Elon to make up some story.
Yeah, Tesla EPS 2Q revenue 25.5. They beat by about 500 million on revenue, which is good. EPS came down by 8 cents, which, I mean, it's not amazing, but it's not horrible either. Oh, where's Enphase? Let's see Enphase now. So Tesla's flat, Google's flat. Google's up a little bit. Enphase is up 8%. Okay. Nice to see. I'll get the Enphase results in a second. But yeah, Tesla and Google really boring. Enphase 303 million and gross margins of 47%. It looks like I think they beat on EPS, but revenue, I believe they came in line. So that's why Enphase is up. All right, let me pull up the Tesla deck. Yeah, let's pull up the
Yeah,
Tesla
it's
deck
up.
and we'll go through that.
It's up.
Yeah, sorry guys, this is not the most exciting earnings.
Well, I rather have this than lose 10% as well. So
Well, I don't have a big position, so I want to see some 10%, baby. I want to see up or down. I want to
these
see.
are top 5 positions for me. So
All right, so this is where we got to go through the numbers. M-Phase is down now. No, M-Phase just lost 5%. It's still up 3%. Tesla's down 1%, relatively nothing. Google's up about 1%. Visa's down 1.84% right now. Okay, so let's go through the numbers. Cash flow 3.6 billion, operating income 1.6 billion, record energy storage deployment. We already knew that. Optimus began performing tasks autonomously in our facilities. We already knew that as well. Cybertruck became best-selling EV pickup in the US in Q2. We already knew that as well. In Q2, we achieved record quarterly revenues despite a difficult operating environment. The energy storage business continues to grow rapidly, resulting in record revenues and gross profits for the overall segment. We also saw a sequential rebound in vehicle deliveries in Q2 as overall consumer sentiment improved, and we launched attractive financing options. That really is what helped it. We recognized record regulatory credit revenues in Q2 as other OEMs are still behind on meeting emission requirements. Global EV penetration returned to growth in Q2 and is taking share away from ICE vehicles. We believe that pure EV is the optimal vehicle design and will ultimately win over consumers as the myths on range, charging, and services are debunked. Progress continued for our AI initiatives in Q2. We reduced the price of FSD in North America and launched free trials to everyone with the necessary hardware. These programs have demonstrated success and are laying the foundation for more meaningful FSD monetization. We expect to see an increase in FSD attach rates for our fleet of the capability improvements as we see increased awareness for the convenience and safety of our users. Overall, our focus remains on the company-wide cost reduction, including reducing COGS per vehicle, growing our traditional hardware business, and accelerating development of our AI-enabled products and services. Though timing of the robotaxi deployment depends on technological advancement and regulatory approval, interesting wording, we are working vigorously on this opportunity given the outsized potential value. Concurrently, we are managing our product portfolio with long-term orientation and focusing on growing sales, maximizing our install base, and generating sufficient cash flow to invest in future growth. Tesla is down 1.5% after hours. What do you think about the summary, Neil? Anything exciting that they said there?
well, we have the answer of one of the things I wanted to hear. So global EV penetration returned to growth in Q2 and taking share from ICE vehicles. So that's a positive. All the rest remains a bit unchanged, I would say.
Yeah, this is boring, bro. This is not why I got into the markets. I got in for the 40%. Like, what is this? This is not. Is this the bull market or is this a flat? Like, this is. I wanted to see something fun here. Tesla now down 2%. Google up 1%.
Margins rebounded, so that's good.
Yeah, so total automotive revenue is 21 billion. That's down 7% year over year. Energy is up 100% year over year. I think people expected that would be good, but that's really good. 1.5 billion. Services is up 21%, 2.1 billion. Total revenue is 24.9. That's up 2% year over year. No, that's down 2% year over year. That should say down. I don't know why that says. Oh, no, sorry. That's up. I'm looking at the wrong number. Yeah, that's up. 25 billion. Sorry. That's up. Total gross profit is up 1%. And then GAAP gross margin is down slightly year over year, but not dramatically. Net income, that's down 45%. That's why the EPS is down. And then net cash provided by operating activities, that's down 18% as well, 3.6 billion. So total revenue increased 2% year over year. Revenue was impacted by growth in energy, Cybertruck deliveries, higher regulatory credit revenue, growth in services, and then negative foreign exchange impacts of 300 million. And then kind of the same arguments for profitability. Model 3, they sold 386,000, or they produced 386,000. They delivered 422,000. 21,000 of the other deliveries. Total was 443. We knew that, which is down about 5% year over year. Yeah, it's if you're a Tesla bull and the stock is up from 138 and you average down during that 140 to 160, you can't really be too upset. But people who bought calls thinking this thing would fly, that's definitely not happening yet. AI. In Q2, we focused on reducing interventions with FSD while improving driving comfort. Notably, we rolled out a version of FSD that primarily relies on eye tracking software to monitor driver attentiveness. We also increased the robustness of our next-gen FSD model with substantially more parameters. Looking ahead to the future autonomous driving and robotaxi service, we continue progress on software and hardware development. Optimus is performing its first task, handling batteries in one of our facilities. The south extension of Gigafactory Texas is nearing completion and will host our largest cluster of H100s. There's the charts right there on FSD miles. Great for covered call sellers. Yeah, if you sold covered calls, even if you sold some puts, you were doing okay with these earnings.
I mean, look at the Tesla AI training capacity ramp through end year, where we are right now and where we'll be at the end of the year.
Yeah. Wow. Look at that. Right now we're at just over 35,000, and they plan to get to 90,000. That's pretty incredible. That means more capex for NVIDIA, which is good. Energy storage, both Megapack and Powerwall achieved a record deployment in Q2, resulting in 9.4 gigawatts of total storage deployments. Overall, the energy business achieved record revenues and gross profits. Powerwall 3 rollout continued successfully and is now available in Canada, UK, Germany, and the United States. Yeah, nothing too crazy, guys. I mean, it's a decent earnings, and that's what you got. Let's head to CNBC and see how they're covering this, and then we'll get deeper into Google as well, because we have to go through Google's deck and see kind of what happened there. So not really a dump or a pump. I mean, let's just go to the chart real quick. Yeah, Iron Condor is also probably printing. Really, this earnings was for the option sellers, not the buyers. Google's now down 1%. Enphase is up 5%. Visa's down 2.74%. And then Tesla here basically down 2% on the day. Okay, let's see what we got here, if we have any coverage on CNBC.
Yeah, so the next generation platform.
We got a bunch of different ones covered. Let's go here. All right, here we go.
X dollars, that's what's fueling the AI revolution. Paul talked about small cap, getting stronger in tech. I believe this is an earnings season that validates the AI revolutions here. 9 p.m. and a party that goes to 4 a.m.
Pardon me for this moment. We got to get to Seema Modi, who's got the Texas Instrument earnings results. Seema.
John, the analog chip maker reporting second quarter earnings, which came in above street expectations at $1.22. The estimate was for $1.17. Revenue coming in line with street expectations, and the third quarter guidance, which has been a big topic for the semiconductor companies, coming at the midpoint of the range. We're looking at shares up about 5% here in overtime. Elliott Management, the activist investor did take a $2.5 billion stake in the company in May. On the earnings call, John, at 4:30 p.m. Eastern, we'll be looking to see if Texas Instruments responds and really talks about free cash flow, which is what the activist investor is pushing for. Again, we're watching the stock here higher in overtime.
Thank you, Seema. Tesla's results are out. We're going through those. We're ready with Alphabet's, though. Steve Kovac has those numbers. Steve?
Hey there, John. Yeah, it's a beat on the top and bottom lines here for Alphabet. We have EPS coming in at $1.89. Street was looking for $1.84. As for revenue, that was a slight beat. $84.74 billion. Street was looking for 84.19. And then let me give you some more bonus numbers here. YouTube advertising revenue, a slight miss of expectations here, 8.66 billion. Street was looking for 8.93 billion. And then Google Cloud, this is a big AI demand indicator here. Another slight beat in this segment. Google Cloud revenue, $10.35 billion. Street was looking for 10.2 billion. John Morgan, I'll send it back over to you.
All right, Steve, thanks. Paul, on Alphabet here, this is CFO Ruth Porat's last earnings call as CFO. She's moving into a president role. Anat Ashkenazi is coming in from Lilly at the end of the month. Now, Ruth Porat was in...
Tesla now down 5%, so Tesla now taking a little bit of a red candle here.
Place as CFO for 9 years, came from Morgan Stanley. The stock is up nearly 7x since then. What do you think the legacy is here, and that they're going to a scientific company for the next CFO, not a bank?
Well, so they're a high-tech company. They went to financial services first, and now they're going to health.
Very closely by investors. What did you like? What didn't you like so far?
I thought it was a Goldilocks quarter. I mean, cloud beat, that's important in terms of now really they're narrowing the gap versus Microsoft, and I think extending versus Amazon. You look at search, that's in line with all of our advertising data and surveys that we did throughout the quarter. This is a company that's now gotten back its mojo. Still think many investors are underestimating where this goes. If you're a bull, you like these numbers, and I think that actually this just puts further fuel into that sort of bull thesis that I think goes into 2025.
Okay, so now we got some volatility. This is what I'm talking about. We got a little bit of red here. So, Neil, why are we down 5%? What's going on?
Well, if you can go back to the, what page was it? Page 10, I believe. The outlook.
The
So-
product outlook?
Yeah, so it's the same thing, right? They remain to start production first half of 2025, but above it, the volume-wise, they say that in 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023.
But they already said this. They said this last quarter.
Did they? Or
Yeah,
did they say, or did they again reiterate the same? Sometimes it might be more, sometimes it might be less. Because now I believe it's black on white saying that. Let me just double
Oh, but
check.
they remember the whole significantly notable, like those keywords were something everyone highlighted. I think in Q4. I don't even think they said that in Q1. Well, you guys in the chat, do you remember?
No, you're right. You're right. I have the Q1 here. You're right. But maybe reiterating this again and again, maybe the market was expecting something better. I don't know, but it's still there. But fine. I mean, if we can get the next generation vehicles out faster, so be it.
Interesting. I mean,
Else?
yeah. Does anyone think it deserves to go down 4% on these earnings? Like, yeah, we knew the numbers would suck, which they beat on revenue. Only EPS kind of sucks. Energy was great. So I don't know if these numbers deserve to be. I don't know if it deserves to go down 4 or 5%.
I mean, we have some improvements in some segment. Margins improve quarter over quarter. Free cash flow is back up. They say here with regards to battery, they produced over 50% more 4680 cells than in Q1 and continue to see cost improvement. So that's great because the 4680 project has been dragging on for a long time. So that's great to see some improvements there. You said it's down, what, 4%?
Yeah, it's recovering a little bit right here.
Yeah, 4% is not that much, especially when you still have an earnings call with Elon Musk. So can go down more or can recover if he gives us some useful answers. But I mean, overall, let's be honest, the stock did go up quite a lot since last quarter based on future expectations. This quarter came in double beat, margin improved quarter over quarter, but is it a $246 stock right now? Probably not, but based on future expectations, maybe.
Yeah, this is very interesting. It's recovering a little bit right here. I feel like this is going to be boring as well. It might just get eaten up, or if it closes 2%, who cares, right? It's not that big of a deal. Google right here still down about 0.22% on the day. Yeah, this is just a boring earnings. Nothing too crazy. Okay, we'll hear a little bit more, and then I'll try to get deeper into Google and see what we've got going on with Google.
Yeah, I'll check Enphase in a second.
Pressure right now is that this is a miss in the bottom line. The company earning 52 cents a share adjusted. The street was expecting 62 cents a share. Revenue coming in better than expected at $25.5 billion. The estimate on the street was $24.77 billion. We're going through right now in terms of what the company is saying for the outlook, if you will. The only thing they're saying is language that we have heard before, that for 2024, the volumes may be notably lower than what the company has established as its growth rate. And we've heard this before from the company. So the question becomes, they delivered 1.8 million vehicles last year. The estimate going into this report was 1.82 million, which would mean a big second half of the year. If they're not going to hit that, they're not giving us a number at this point, but clearly that's some of the pressure that you're seeing on shares of Tesla. I think the bigger indication of where these shares go will come during the conference call, which is at 5:30. That's when we will hear perhaps more about robotaxi plans, as well as plans for a lower priced model. That's where people will be focused on what happens with Tesla. And I think that's where you see the direction of the shares moving.
Right. Can't put too much on that initial move. Phil, thank you. Dan Ives, not used to seeing top line beat and a bottom line miss. Makes me worried about gross margins. How do you feel about that?
Yeah, look, they're going through clearly margin stabilization, but that's the important thing. Is this sort of the bottom? Do we have a bottoming process in terms of price cuts and now see stabilization there with demand that we believe turning around in China? And as Phil talked about, this is a company now that's gotten back, I think, really the momentum in terms of the China story. Price cuts, I think 95, 98% are in the rearview mirror. And you look at this quarter, what I believe on the conference call, it's going to be a much more confident Musk talking about demand second half. Robotaxi day, we believe, call it early to mid-October. A lot more things now, I think, going positive for Tesla than it was even 3 months ago, where New York City cab driver was bearish in this name.
All right, well, we've got Visa earnings out. Leslie Picker has those numbers for us. Leslie.
Okay, we'll get into Visa in a second. But let's look at Google. So what I'm looking at right now on Google, Google's up a little bit. And I mean, the stocks are up 32% year to date in terms of a lot of the Max 7, 20 to 30%. So hard to expect massive, massive growth in terms of the stocks. The fact that they're not declining is so important. So ad revenue, 64.6 billion. That's a beat by like 10 million. That's not a big beat. Cloud revenue, 10.3 billion. That's a beat compared to 10.09 billion. And then EPS, they beat by 4 cents. I'm going to pull up their deck right now. But did anything stand out to you, Neil, as you're looking at those?
No, I mean, as expected, free cash flow is a bit lower than what I thought. It's 13 point something billion. But I mean, cloud is still growing closer to 28, 29% or so. So growing quite fast. More profits from that as well. So that's great. If they can continue to grow at 28% year over year, I mean, that's going to help them quite a lot. So YouTube, we heard an analyst say there was a small miss, but again, not such a big deal. Still growing 13% year over year, despite its size. And I still think it can grow more because, I mean, does YouTube have a competition other than TikTok and Instagram? Not that much. Yeah. So they'll continue to grow, maybe with sports as well. So that's good. Other than that, no, I mean, it's a good quarter, pretty boring, but yeah, I mean, it's a $2.2 trillion company. So for it to go up 10% after hours, it really needed to show us something incredible, which I don't think that right now that's the case.
Yeah, we've got the Google call in 7 minutes, guys. I just realized they're at 4:30, so we'll actually be able to listen to Google, and then right after we'll get into Tesla. So we'll get to do Google first for an hour, and then Tesla. So we'll hear from Sundar. He said, our strong performance this quarter highlights ongoing strength in search and momentum in cloud. We are innovating at every layer of the AI stack. Our longstanding infrastructure leadership and in-house research team. Blah, 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 blah. That's important. CFO says we delivered revenues of 85 billion, up 14% year over year based on search and cloud. Which for the first time exceeded 10 billion in quarterly revenues and 1 billion in operating profit. That's great for the cloud business as well. Revenues are up 14% year over year. Operating margins are up 3% from 29 to 32. And then net income is up about 5 billion from 18.3 to 23 billion. $23 billion in profits, dude. This is why it's just hard to own other things besides the Max 7. Maybe as a trade, sure, but like what other companies on the planet can produce $23 billion of profit every 90 days? I mean, it's tough. It's very hard to do that. YouTube ads, 8.6 billion. That's up from 7.6 billion. Search, 48 billion, up from 42. Obviously, ChatGPT is not stopping search at all. It's continuing to do what it has to do. Google Network, 7.4. That's down a little bit. Advertising, 64 versus 58. And then cloud, 10 billion over 8 billion. That's great growth. Other bets, I would imagine this is like Waymo and Fitbit and stuff. That's up a little bit as well. And they got rid of 2,000 employees. So they're getting more efficient as well. Yeah, relatively simple earnings. The call, I don't think they're going to say anything that different. I do think they may be asked a little bit more deeper on when the monetization of AI really kicks off, whether it's from an advertising perspective or Gemini, whatever it may be. But if you're a Google investor, if you're Bill Ackman that has a multi-billion-dollar position, you're definitely not upset with any of this. It's just another quarter where you're happy you bought in lower than 100.
Yeah, they're buying back shares, paying a dividend, growing. AI monetization with these types of companies is probably first going to come from just cloud.
Yes.
More companies becoming customers using their cloud, their models, Gemini, DeepMind, all of their research behind that. So that's it. I would love to hear more about the Pixel phone, how that is doing. I know there's an event at the end of August or mid-August for the Pixel 9, I believe. It's certainly something that keeps growing under the radar. I mean, the phone, they're paying quite a lot of money to Samsung and Apple to be the default browser. If they can take a lot of market share in the phone business with their own phone, I mean, why would they continue to pay tens of billions, close to $20 billion just to be the default browser when, by the way, they control Android as well? So I think there's still some ways to go there. A lot of way to go, actually. Plus, they have Waymo. If that works out, I mean, that's also other bets, other big bets.
I agree. Let's get Visa real quick. We got Google's call in about 4 minutes, and let's see what we got on Visa.
Hey, Morgan. It's essentially a match with estimates on the bottom and top line. We're seeing $2.42 per share on the EPS side. Special items in the quarter included $118 million related to the release of the indirect tax reserve previously recognized in fiscal 2021, $67 million related to the donation of investment securities to the Visa Foundation, as well as $10 million for a litigation provision. And that is associated with an interchange multi-district litigation case that Visa is undergoing. On the top line, the company reporting for the third quarter, this is Visa's third quarter, $8.9 billion in revenue. It's a ever so slight miss relative to consensus, but about 10% higher on a year-over-year basis. And then on an operating expense standpoint, coming in at $3 billion in the quarter, that's a little bit higher than analysts were expecting there. You can see Visa shares down about 1.8% in after-hours trading, guys.
All right, as we digest that, Seagate earnings are out as well. Let's get to Pippa Steve.
Yeah, so Visa showing strength as well. Nothing too much of an issue, showing the consumer maybe isn't that out of touch. Visa's down about 2%. Google now up 1%. Tesla recovering, 242, down 1.7%.
I mean, didn't we have American Express earnings as well? And I believe the comments there were also quite positive on the US consumer. So
yeah,
the Visa one shouldn't be that surprising. And Visa as well is probably also a company where you think you could get it cheaper, but it's never that cheap either, despite it dropping a little bit. But
Visa is expensive to you? Oh wow, price to sales 15. Wow.
I mean, price to sales at 15, but forward PE is 25.4, so not that expensive. Price to free cash flow 26.9, and you know it's Visa and MasterCard, so you're paying for a sort of a duopoly here.
Yeah.
So no, I mean, very, very strong company.
All right, we got the earnings call for Google in about 40 seconds, so we'll go to that. Tesla recovering pretty much everything it lost, down now just a bit. But it looked like it was taking a tumble, and then the dip buyers came in at 235 and they bought. So,
Enphase had a better than expected quarter-ish.
Right. Obese Tomato, thank you for the $10 super chat. Do these latest earnings results make you a bit uneasy regarding Palantir earnings? Seems beating isn't enough anymore. You have to crush them to get positive movement. Yeah, you definitely have to crush. I don't think it's just for Palantir. I think it's for everything. And so we'll see if Palantir can crush. If not, they might get a little bit of a haircut, but I don't know if the haircut's back to $20. Maybe it's to 26, 27, or 25, which isn't that crazy. But if they beat nicely, maybe we get into that $30 range. All right, I think Google should be starting. Yeah, they should be starting soon, and then we'll hear from Sundar on what's going on.
Do you think he'll get asked about the Wiz?
Probably.
We're standing by for the Alphabet second quarter 2024 earnings session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Director of Investor Relations. Please go ahead. Welcome, everyone.
Good afternoon,
Thank you for
everyone.
standing by.
Thank you. Good afternoon, everyone, and welcome to Alphabet's second quarter 2024 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Ruth Porat. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim, and hello, everyone. I'm really pleased with our results this quarter. They show tremendous ongoing momentum in search and great progress in cloud with our AI initiatives driving new growth. Search had another excellent quarter. And in terms of product innovation, we are seeing great progress with AI overviews. In Q2, cloud reached some major milestones. Quarterly revenues crossed the $10 billion mark for the first time, at the same time passed the $1 billion mark in quarterly operating profit. Year to date, our AI infrastructure and generative AI solutions for cloud customers have already generated billions in revenues and are being used by more than 2 million developers. As I spoke about last quarter, we are uniquely well positioned for the AI opportunity ahead. Our research and infrastructure leadership means we can pursue an in-house strategy that enables our product teams to move quickly. Combined with our model building expertise, we are in a strong position to control our destiny as the technology continues to evolve. Importantly, we are innovating at every layer of the AI stack, from chips to agents and beyond, a huge strength. We are committed to this leadership long term. This was underscored by the announcements we made at I/O, Cloud Next, and Google Marketing Live, and we'll touch on many of them here. Today, I'll start with search, then move to our AI momentum more generally, followed by cloud, YouTube, and some closing thoughts. Let's dive in. Over the past 25 years, we have continued to reimagine and expand Google Search across many technological shifts. With AI, we are delivering better responses on more types of search queries and introducing new ways to search. We are pleased to see the positive trends from our testing continue as we roll out AI overviews, including increases in search usage and increased user satisfaction with the results. People who are looking for help with complex topics are engaging more and keep coming back for AI overviews. And we see even higher engagement from younger users aged 18 to 24 when they use search with AI overviews. As we have said, we are continuing to prioritize approaches that send traffic to sites across the web. And we are seeing that ads appearing either above or below AI overviews continue to provide valuable options for people to take action and connect with businesses. Beyond AI overviews, AI expands the types of queries we are able to address and opens up powerful new ways to search. Visual search via Lens is one. Soon you'll be able to ask questions by taking a video with Lens. And already we have seen that AI overviews in Lens leads to an increase in overall visual search usage. Another example is Circle to Search, which is available today on more than 100 million Android devices. We are seeing tremendous momentum from our AI investments. More than 1.5 million developers are now using Gemini across our developer tools. And we recently unveiled new models that are more capable and efficient than ever. Gemini now comes in 4 sizes, with each model designed for its own set of use cases. It's a versatile model family that runs efficiently on everything from data centers to devices. At 2 million tokens, we offer the longest context window of any large-scale foundation model to date, which powers developer use cases that no other model can handle. Gemini is making Google's own products better. All 6 of our products with more than 2 billion monthly users now use Gemini. This means that Google is the company that's truly bringing AI to everyone. Gemini is powering incredibly helpful features in Search, Workspace, Google Messages, and more. At I/O, we showed new features coming soon to Gmail and to Google Photos. Soon you'll be able to ask Photos questions like, what did I eat at that restaurant in Paris last year? For a glimpse of the future, I hope you saw Project Astra at I/O. It shows multimodal understanding and natural conversational capabilities. We've always wanted to build a universal agent, and it's an early look at how they can be helpful in daily life. Our AI product advances come from our long-standing foundation of research leadership, as well as our global network of infrastructure. In Q2, we announced our first data center and cloud region in Malaysia and expansion projects in Iowa, Virginia, and Ohio. Our TPUs are a key bet here too. Trillium is the 6th generation of our custom AI accelerator, and it's our best performing and most energy efficient TPU to date. It achieves a near 5x increase in peak compute performance per chip and is 67% more energy efficient compared to TPU v5e. And the latest NVIDIA Blackwell platform will be coming to Google Cloud in early 2025. We continue to invest in designing and building robust and efficient infrastructure to support our efforts in AI, given the many opportunities we see ahead. Of course, as we do this, we'll continue to create capacity by allocating resources towards our highest priorities. We are relentlessly driving efficiencies in our AI models. For example, over the past quarter, we have made quality improvements that include doubling the core model size for AI overviews, while at the same time improving latency and keeping cost per AI overview served flat. And we are focused on matching the right model size to the complexity of the query in order to minimize impact on cost and latency. Separately, on our real estate investments, we are taking a measured approach to match the current and future needs of our hybrid workforce, as well as our local communities. Next, Google Cloud. We continue to see strong customer interest, winning leading brands like Hitachi, Motorola Mobility, and KPMG. Our deep partnership with Oracle significantly expanded our joint offerings to their large customer base. Our momentum begins with our AI infrastructure, which provides AI startups like Essential AI with leading cost performance for models and high-performance computing applications. We continue to drive fundamental differentiation with new advances since Cloud Next. This includes Trillium, which I mentioned earlier, and A3 Mega powered by NVIDIA H100 GPUs, which doubles the networking bandwidth of A3. Our enterprise AI platform, Vertex, helps customers such as Deutsche Bank, Kingfisher, and the US Air Force build powerful AI agents. Last month, we announced a number of new advances. Uber and WPP are using Gemini Pro 1.5 and Gemini Flash 1.5 in areas like customer experience and marketing. We broadened support for third-party models, including Anthropic's Claude 3.5 Sonnet, and open-source models like Gemma 2, Llama, and Mistral. We are the only cloud provider to offer grounding with Google Search, and we are expanding grounding capabilities with Moody's, MSCI, ZoomInfo, and more. Our AI-powered applications portfolio is helping us win new customers and drive upsell. For example, our conversational AI platform is helping customers like Best Buy and Gordon Food Service. Gemini for Workspace helps Click Therapeutics analyze patient feedback as they build targeted digital treatments. Our AI-powered agents are also helping customers develop better quality software, find insights from their data, and protect their organization against cybersecurity threats using Gemini. Software engineers at Wipro are using Gemini Code Assist to develop, test, and document software faster. And data analysts at Mercado Libre are using BigQuery and Looker to optimize capacity planning and fulfill shipments faster. Cybersecurity risks continue to accelerate, and the number of breaches continue to grow. something we all see in the news every day and that our Mandiant teams help manage. Our strong track record of uptime, quality control, and reliability make Google Cloud the trusted security choice for organizations like Fiserv and Marriott International. In Q2, we infused AI throughout our security portfolio, helping TELUS strengthen its proactive security posture. Turning next to YouTube. YouTube is focused on a clear strategy, connecting creators with a massive audience and enabling them to build successful businesses through ads and subscriptions while helping advertisers reach their desired audience. We had a great brandcast this quarter, and Philip will say more. I'm pleased at the progress here. YouTube has remained number one in US streaming watch time, according to Nielsen. Views of YouTube Shorts on connected TVs more than doubled last year, and we are making it easier for creators to add captions and turn regular videos into shorts. Next, on Android and Pixel. We joined Samsung for their Galaxy Unpacked event a few weeks ago, and we shared that Samsung's new devices will include the latest AI-powered Google updates on Android. It was a great event. I'm looking forward to our Made by Google event happening in August. We'll have lots to share around Android and the Pixel portfolio of devices. Our Pixel line is doing well. We recently introduced the new Pixel 8a, powered by our latest Google Tensor G3 chip. It provides beautiful AI experiences like Circle to Search, Best Take, and a Gemini-powered AI assistant. In other bets, I'm really pleased with the progress Waymo is making, a real leader in the space and getting rave reviews from users. Waymo has served more than 2 million trips to date and driven more than 20 million fully autonomous miles on public roads. Waymo is now delivering well over 50,000 weekly paid public rides, primarily in San Francisco and Phoenix. And in June, we removed the waitlist in San Francisco so anyone can take a ride. Fully autonomous testing is underway in other Bay Area locations without a human in the driver's seat. Before I close, I want to acknowledge that today is Ruth's final earnings call. Let me take a moment to thank her for all she has done for Google and Alphabet as our longest-serving CFO. I'm excited to continue to work with her in her new role. And I look forward to welcoming our newly appointed CFO, Anat Ashkenazi. She starts next week, and you'll hear from her on our call next quarter. Thanks, as always, to our employees and partners everywhere for a great Q2. With that, over to you, Philip.
Thanks, Sundar, and hello, everyone. Starting with performance, Google Services delivered revenues of $73.9 billion for the quarter, up 12% year-on-year. Search and other revenues grew 14% year-on-year, led by growth in the retail vertical, followed by financial services. YouTube ads revenues were up 13% year-on-year, driven by growth in brand as well as direct response. Network revenues declined 5% year-on-year. In subscriptions, platforms, and devices, year-on-year revenues increased 14%, driven again by strong growth in YouTube subscriptions. For the rest of my remarks, I want to double-click on two topics. First, how we are applying AI across the marketing process to deliver an even stronger ads experience. Second, YouTube's position as the leading multi-format platform. So let me start by sharing some of the ways we're applying AI to bring more performance benefits to even more businesses. Q2 brought several major opportunities to meet and learn from users, developers, creators, and customers. From I/O to Brandcast, Google Marketing Live, and Cannes, a growing number of our customers and partners are looking to understand how to successfully incorporate AI into their businesses. This quarter, we announced over 30 new ads features and products to help advertisers leverage AI and keep pace with the evolving expectations of customers and users. Across search, PMax, demand gen, and retail, we're applying AI to streamline workflows, enhance creative asset production, and provide more engaging experiences for consumers. Listening to our customers, retailers in particular have welcomed AI-powered features to help scale the depth and breadth of their assets. For example, as part of a new and easier-to-use Merchant Center, we've expanded Product Studio with tools that bring the power of Google AI to every business owner. You can upload a product image, prompt the AI with something like, feature this product with Paris skyline in the background, and Product Studio will generate campaign-ready assets. I also hear great feedback from our customers on many of our other new AI-powered features. We're beta testing virtual try-on and shopping ads and plan to roll it out widely later this year. Feedback shows this feature gets 60% more high-quality views than other images and a higher click-out to retailer sites. Retailers love it because it drives purchasing decisions and fewer returns. Our AI-driven profit optimization tools have been expanded to Performance Max and standard shopping campaigns. Advertisers who use profit optimization and smart bidding see a 15% uplift in profit on average compared to revenue-only bidding. Lastly, Demand Gen is rolling out to Display and Video 360 and Search Ads 360 in the coming months, with new generative image tools that create stunning, high-quality image assets for social marketers. As we said at GML, when paired with Search or PMax, Demand Gen delivers an average of 14% more conversions. The use cases we're seeing across the industry show the incredible potential of these AI-enabled products to improve performance. Let me briefly share 2 examples with you. Luxury jewelry retailer Tiffany leveraged Demand Gen during the holiday season and saw a 2.5% brand lift in consideration and actions, such as adding items to carts and booking appointments. The campaign drove a 5.6 times more efficient cost per click compared to social media benchmarks. Our own Google marketing team used Demand Gen to create nearly 4,500 ad variations for a Pixel 8 campaign shown across YouTube, Discover, and Gmail, delivering twice the click-through rate at nearly a quarter of the cost. In addition to strengthening our ads products for customers, we continue to evolve our existing systems and products with improved models, delivering further performance gains. In just 6 months, AI-driven improvements to quality, relevance, and language understanding have improved broad match performance by 10% for advertisers using smart bidding. Also, advertisers who adopt PMax to broad match and smart bidding in their search campaigns see an average increase of over 25% more conversions or value at a similar cost. We'll continue to listen to our customers and use their feedback to drive innovation across our products. As you can hear, I continue to be excited about the AI era for ads. Now let's turn to YouTube. I've talked before about our approach to making YouTube the best place to create, watch, and monetize. First, the best place to create. What sets YouTube apart from every other platform are the creators and the connection they have with their fans. Audiences tuning in to watch their favorite creators continue to grow. For example, 2 weeks ago, Mr. Beast's channel hit more than 300 million subscribers. Next, the best place to watch. Our long-term investment in CTV continues to deliver. Views on CTV have increased more than 130% in the last 3 years. According to Nielsen, YouTube is the #1 most watched streaming platform on TV screens in the US for the 17th consecutive month. Zooming out, when you look not just at streaming, but at all media companies and their combined TV viewership, YouTube is the 2nd most watched after Disney. And this growth is happening in multiple verticals, including sports, which has seen CTV watch time on YouTube grow 30% year over year. Lastly, the best place to monetize. CTV on YouTube is continuing to benefit from a combination of strong watch time growth, viewer and advertiser innovation, and a shift in brand advertising budgets from linear TV to YouTube. Our largest advertisers across verticals, including retail, entertainment, telco, and home and personal care, are partnering with creators on ads and organic integrations. Verizon, for example, worked with a YouTube creator and Verizon customer to show the many ways that plans and offerings can be customized to fit people's lives. Using AI-powered formats, they created sketches in multiple lengths and orientations to serve the right creative to the right viewer and drive people to their site. Verizon's creator ads had a 15% lower CPA and a 38% higher conversion rate versus other ads. Turning to Shorts. Last quarter, I shared that in the US, the monetization rate of YouTube Shorts relative to in-stream viewing is showing a healthy rate of growth. Again, this quarter, we continue to see an improvement in Shorts monetization, particularly in the US. We're also seeing a very encouraging contribution from brand advertising on Shorts, which we launched on the product in Q4 last year. Lastly, a few words on shopping. Last year, viewers watched 30 billion hours of shopping-related videos, and we saw a 25% increase in watch time for videos that help people shop. While it's still early days, shopping remains a key area of investment. At GML, we rolled out several product updates to YouTube Shopping, helping creators sell products to their viewers. These updates included product tagging, where creators can tag products in their videos for viewers to discover and purchase, product collections, and a new affiliate hub, a one-stop shop for creators to find deals and promotional offers from brands and track their affiliate earnings. With that, I'll finish by saying a huge thank you to Googlers everywhere for their extraordinary commitment, and to our customers and partners for their continued collaboration and trust. And Ruth, thanks for your amazing leadership and partnership over all these years. Now, for one last time, it's over to you.
Thank you, Philip, and thanks, Sundar, for those kind words. We had another strong quarter, driven in particular by performance in search and cloud, as well as the ongoing efforts to durably re-engineer our cost base. My comments will be on year-over-year comparisons for the second quarter, unless I state otherwise. I will start with results at the Alphabet level, followed by segment results, and conclude with our outlook. For the second quarter, our consolidated revenues were $84.7 billion, up 14%, or up 15% in constant currency. Search remained the largest contributor to revenue growth. In terms of expenses, total cost of revenues was $35.5 billion, up 11%. Other cost of revenues was $22.1 billion, up 14%, with the increase driven primarily by content acquisition costs, followed by depreciation, as well as the impact of the Canadian Digital Services Tax, which was applied retroactively. Operating expenses were $21.8 billion, up 5%, primarily reflecting an increase in R&D, partially offset by a decline in G&A, with sales and marketing essentially flat to the second quarter last year. The increase in R&D was driven primarily by compensation, which was affected by lapping a reduction in valuation-based compensation liabilities in certain other bets in the second quarter last year, followed by depreciation. The largest single factor in the year-on-year decline in G&A expenses was lower charges related to legal matters. Operating income was $27.4 billion, up 26%, and our operating margin was 32%. Net income was $23.6 billion, and EPS was $1.89. We delivered free cash flow of $13.5 billion in the second quarter and $60.8 billion for the trailing 12 months. As a reminder, last year we had a timing benefit in the second and third quarters from a $10.5 billion deferred cash tax payment made in the fourth quarter, which depressed reported free cash flow growth this quarter and will do so again next quarter. We ended the quarter with $101 billion in cash and marketable securities. Turning to segment results. Within Google Services, revenues were $73.9 billion, up 12%. Google Search and other advertising revenues of $48.5 billion in the quarter were up 14%, led again by growth in retail, followed by the financial services vertical. YouTube advertising revenues of $8.7 billion were up 13%, driven by brand, followed by direct response advertising. Network advertising revenues of $7.4 billion were down 5%. Subscription platforms and devices revenues were $9.3 billion, up 14%, primarily reflecting growth in YouTube subscription revenues. TAC was $13.4 billion, up 7%. Google Services operating income was $29.7 billion, up 27%, and the operating margin was 40%. Turning to the Google Cloud segment, revenues were $10.3 billion for the quarter, up 29%, reflecting first significant growth in GCP, which was above growth for cloud overall and includes an increasing contribution from AI, and second, strong Google Workspace growth, primarily driven by increases in average revenue per seat. Google Cloud delivered operating income of $1.2 billion and an operating margin of 11%. As to our other bets for the second quarter, revenues were $365 million, and the operating loss was $1.1 billion. Turning to our outlook for the business, with respect to Google Services, first within advertising, the strong performance of search was broad-based across verticals. In YouTube, we are pleased with the growth in the quarter. We had healthy watch time growth, continued to close the monetization gap in shorts, and had continued momentum in connected TV, with brand benefiting in part from an ongoing shift in budgets from linear television to digital. As we look forward to the third quarter, we will be lapping the increasing strength in advertising revenues in the second half of 2023, in part from APAC-based retailers. Turning to subscriptions, platforms, and devices. First, we continue to have significant growth in our subscriptions business, which drives the majority of revenue growth in this line. However, there was a sequential decline in the year-on-year growth rate as we anniversaried the impact of a price increase for YouTube TV in the second quarter last year. The impact will persist through the balance of the year. Second, with regard to platforms, we are pleased with the performance in Play, driven by an increase in buyers. Finally, with respect to devices, the most important point as we look forward is that our Made by Google launches have been pulled forward into the third quarter from the fourth quarter last year, benefiting revenues in Q3 this year. Turning to cloud, which continued to deliver very strong results. For the first time, cloud crossed $10 billion in quarterly revenues and $1 billion in quarterly operating profit. As Sundar noted, year to date, our AI infrastructure and generative AI solutions for cloud customers have already generated billions in revenues and are being used by more than 2 million developers. We're particularly encouraged that the majority of our top 100 customers are already using our generative AI solutions. We continue to invest aggressively in the business. Turning to margins. The margin expansion in Q2 versus last year reflects our ongoing efforts to durably re-engineer our cost base as well as revenue strength. Our leadership team remains focused on our efforts to moderate the pace of expense growth in order to create capacity for the increases in depreciation and expenses associated with the higher levels of investment in our technical infrastructure. Once again, headcount declined quarter on quarter, which reflects both actions we have taken in the first half of the year and a much slower pace of hiring. Looking ahead, we expect a slight increase in headcount in the third quarter as we bring on new graduates. As we have discussed previously, we are continuing to invest in top engineering and technical talent, particularly in cloud and technical infrastructure. Looking forward, we continue to expect to deliver full year 2024 Alphabet operating margin expansion relative to 2023. However, in the third quarter, operating margins will reflect the impact of both the increases in depreciation and expenses associated with the higher levels of investment in our technical infrastructure, as well as the increase in cost of revenues due to the pull forward of hardware launches into Q3. With respect to CapEx, our reported CapEx in the second quarter was $13 billion, once again driven overwhelmingly by investment in our technical infrastructure, with the largest component for servers, followed by data centers. Looking ahead, we continue to expect quarterly CapEx throughout the year to be roughly at or above the Q1 CapEx of $12 billion, keeping in mind that the timing of cash payments can cause variability in quarterly reported CapEx. With regard to other bets, we continue to focus on improving overall efficiencies as we invest for long-term returns. Waymo is an important example of this, with its technical leadership coupled with progress on operational performance. As you will see in the 10Q, we have chosen to commit to a new multi-year investment of $5 billion. This new round of funding, which is consistent with recent annual investment levels, will enable Waymo to continue to build the world's leading autonomous driving technology company. To close, this is my 56th and last earnings call, 37 of them at Alphabet, so I have a few closing thoughts of gratitude. I've been so proud to be at Google and Alphabet as CFO and to work with some of the smartest people in the world every day. I think we have accomplished a lot in the last 9+ years, and I am confident that progress will continue. Of course, I'm not going far, and I'm honored to have my new role, which I've been slowly working my way into during the past 11 months. And I look forward to continuing to work with Sundar and our great team. Being CFO of one of the most important companies in the world has been the opportunity and responsibility of a lifetime. Google's mission of advancing technology and bringing information to people throughout the world is as relevant today as it was when I worked on its IPO. Technology has been a catalyst for economic growth throughout human history. The people on this call know that if technological advancement is not the focus of every business and government, they will be left behind. Underpinning this is the need for sound and responsible investment. That has never been more important than today, and certainly that is Google and Alphabet's focus. I want to end by thanking Googlers around the world for the innovation and commitment that has enabled us to deliver such extraordinary products and services globally. I also want to thank our investors and analysts for your long-term support and your feedback. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star 1 on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Your first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. First, thank you, Ruth, for all the help and significant impact over the past decade. The first one, it's a little bit of a jump ball, I guess, for Sundar, Philip, or Ruth. I guess we're sort of 18 months into this fever pitch around a Gen AI focus in the world. Maybe from any of your perspective, can you just sort of talk to us about areas where you've seen faster than expected traction or testing adoption of some of the generative AI capabilities versus slower than expected traction and testing from a Google perspective? And then Ruth, appreciate all the comments about structurally re-engineering the OpEx base. Are there any more tangible examples of areas you can talk to us about where you still see further ways to drive more efficiency across the company? Thanks.
Brian, thanks. I'll take the first part. I think it's a good question. Obviously, I think there is a time curve in terms of taking the underlying technology and translating it into meaningful solutions across the board, both on the consumer and the enterprise side. Definitely on the consumer side, I'm pleased, as I said in my comments earlier, in terms of how for a product like search, which is used at that scale over many decades, how we've been able to introduce it in a way that it's additive and enhances the overall experience and is positively contributing there. I think across our consumer products, we've been able, I think we are seeing progress on the organic side. Obviously, monetization is something that we would have to earn on top of it. The enterprise side, I think we are at a stage where definitely, there are a lot of models. I think roughly the models are all kind of converging towards a set of base capabilities. But I think where the next wave is, working to build solutions on top of it. And I think there are pockets, be it coding, be it in customer service, et cetera, where we are seeing some of those use cases, seeing traction. But I still think there is hard work there to completely unlock those.
And on your second question, first, thank you for your comments. Look, the reason we've consistently used the phrase that we're focused on durably re-engineering our cost base is because these are deep work streams. They're not tactical fixes, and we continue to build on them. And so the main areas that we've talked about are around product and process prioritization, around organizational efficiency and structure. Both of those are reflected in the headcount and the fact that headcount is down year on year. And across all of those, as I said, across our entire leadership team, we remain focused on continuing to execute against them. So in terms of, the most recent examples, as we talked about last quarter, with the combination of the devices and services product area with the platforms and ecosystems product area. We announced that back in April. And what we discussed last quarter and what we're seeing is that unifying teams across these organizations helps with product execution. And what we're really focused on is really adding to velocity and efficiency. So kind of the gift that keeps giving. And then more broadly, all of the work streams that we've talked to you about before, we continue to remain focused on. A big one, very important one, is all of the efficiency efforts, the work streams around technical infrastructure and improving efficiency there. We're also working on the use of AI across Alphabet. We're working on continuing to build on what we've done with our centralized procurement organization. We're continuing to optimize our real estate portfolio. And so, again, this is across our leadership team. These are efforts that all build to this phrase, durably reengineering our cost base.
Great. Thank you both.
And our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks for taking questions. One for Ruth and one for Sundar. Ruth, you've now had Google Services operating margins of roughly 40% for the past 2 quarters. Just as you create more capacity to help offset the future investments, is it reasonable to think that you could sustain at those kind of levels going forward? And then, Sundar, just as it relates to AI overviews, you talked about the positive trends there. Could you just help us understand where you are, how far along in rolling out AI overviews, and then any more color around kind of click-through rates and monetization levels relative to your traditional searches? Thanks.
So in terms of the Google Services operating margin, it did reflect all the work that we're doing on durably reengineering the cost base. It also reflected the benefit of strong revenue performance in search. And so what I tried to lay out in the comments as we look forward to the third quarter is operating margins will reflect the increases in depreciation and expenses associated with higher levels of our investment in technical infrastructure. It will also reflect higher expenses associated with the Pixel launch due to the pull forward. So those are important factors. I would say overall, company-wide, it's important to note that we do expect to continue to deliver full year 24 Alphabet operating margin expansion relative to 2023, but did want to highlight those important points as we look forward to Q3.
And Doug, thanks on the AI overviews. We are, we have rolled it out in the US, and we are, will be through the course of the year, definitely scaling it up, both to more countries and also, we have taken a conservative start, focused on quality, making sure the metrics are healthy, and so on. But you will see us expand the use cases around it, and we'll touch definitely more queries. All the feedbacks we have seen are positive, and on the monetization side, I think Philip has touched upon it. Maybe Philip, anything more you want to add there?
Yeah, yeah. Look, innovation and improvements to the user experience on search have historically opened up new opportunities for advertisers. We talked about this before. We saw this when we navigated from desktop to mobile, for example. And we can see Gen AI obviously expand the types of questions we can help people with, as Sundar mentioned. And as we said before, people are finding ads either above or below AI overviews helpful. We have a solid baseline here from which we can innovate. And as you have probably noticed at GML, we announced that soon we'll actually start testing search and shopping ads in AI overviews for users in the US, and they will have the opportunity to actually appear within the AI overview in a section clearly labeled as sponsored when they're relevant to both the query and the information in the AI overview, really giving us the ability to innovate here and take this to the next level.
Thank you. Best of luck, Ruth, in your new role.
Thank you.
Our next question comes from Michael Nathanson with Moffett. Please go ahead.
Thanks. I have two, one for Sundar, one for Philippe. Sundar, on the decision this week to not deprecate cookies, I know it's been a long journey. Can you talk a bit about what we should expect in terms of new experience in Chrome and why the company makes the decision not to go down the path of deprecating cookies? And then, Philip, I know it's only one quarter, But it's interesting that search is growing faster than YouTube, which surprised some of us. So can you talk about what factors you think are behind the differences in growth rates between these markets? And is there anything on the AI front that you could see maybe reaccelerating YouTube growth as you've seen happen with search? Thanks so much.
And Michael, on cookies, look, I think obviously, we are super committed to improving privacy for users in Chrome. And that was the whole focus around privacy sandbox, and we remain committed on the journey. But on third-party cookies, given the implications across the ecosystems and considerations and feedback across so many stakeholders, we now believe user choice is the best path forward there. And we'll both improve privacy by giving users choice, and we'll continue our investments in privacy enhancing technologies. But it's obviously an area we will be taking feedback from the players in the ecosystem, and we are committed to being privacy first as well. Philip?
And on the second part of your question, maybe Ruth, you want to jump in first, and then I take the rest if needed.
Absolutely. So, look, as we both noted, search revenues really reflected broad-based growth across verticals. That was led by retail, followed by financial services. I think your question really goes to the heart of the year-on-year growth comparison. And as both Philip and I noted, we're really pleased with YouTube, the YouTube team, all that was done. Was driven by brand, followed by direct response. And they had very strong ongoing operating metrics, which Philip will comment on. I think the important point to note, I tried to tease out in opening comments, was that the deceleration in this year-on-year revenue growth for the second quarter versus the first quarter primarily reflected the tougher comparison versus the first quarter. Because at that point, as you probably recall, YouTube was lapping negative year-on-year growth in Q1 last year. And then also Q1 benefited from the extra day from leap year. And so what you're also seeing here is with YouTube, we were anniversarying the ramp in APAC-based retailers that began in the second quarter last year, and foreign exchange headwinds as well that we noted. And so there's some timing issues going on, and what we're trying to highlight is the underlying operating strength. Back to you, Philip.
Yeah, that was very comprehensive. Nothing really to add from my side here.
The only thing I would say, I think, to Brian's first question on areas where things are maybe taking longer, I think, look, we are all building multimodal models. At least Gemini has been natively multimodal from the ground up. But most of the use cases today that have been unlocked have been around the tech side. So in terms of getting real generative audio, video experiences working well, I think there is still, it's going to take some time. But over time, obviously, it will be deeply relevant to YouTube. And so it's an area I'm excited about in the future.
Okay. Thanks, all. And best to you. Thanks.
Your next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thanks so much. And I'll echo the thanks for Ruth for all the insights and partnership over the years on these earnings calls. Sundar, maybe first for you, in terms of cloud and bringing AI to the enterprise, I wanted to know if you go a little bit deeper in terms of how you're seeing AI actually get adopted, implemented, what it potentially could mean for the strategic positioning of the cloud business and the potential for AI workloads to be a stimulant to revenue growth for cloud first. And then following up, the last set of questions on YouTube were really about the macro or the ad environment. What do you guys as a team continue to learn about the subscription side of YouTube and the appetite for consumers to engage with a broader array of media products at the subscription layer? Thanks.
Thanks, Eric. Look, on the cloud and AI stuff, obviously, it's something which I think will end up being a big driver over time. I mentioned in my opening remarks already. If you take a look at our AI infrastructure and generative AI solutions for cloud across everything we do, be it compute on the AI side, the products we have through Vertex AI, Gemini for Workspace, and Gemini for Google Cloud, etc. We definitely are seeing traction. People are deeply engaging with Gemini models. across Vertex and AI Studio. We now have over 2 million developers playing around with these things. And you are definitely seeing early use cases. But I think we are in this phase where we have to deeply work, and make sure on these use cases, on these workflows, we are driving deeper progress and unlocking value, which I'm very bullish will happen. But these things take time. So, but if I were to take a longer term outlook, I definitely see a big opportunity here. And I think particularly for us, given the extent to which we are investing in AI, our research infrastructure, leadership, all of that translates directly. And so, I'm pretty excited about the opportunity space ahead.
And then on your second question with respect to subscriptions, kind of implicit in your question, how strong is it? As I noted in opening comments, that overall line subscriptions, platforms, and devices delivered healthy growth, and that was led by subscriptions. And as we've said on many calls here in a row, the subscription revenue growth continued to be quite strong. It was driven by subscriber growth in both YouTube TV and YouTube Music Premium. And then the other component within that line is Google One, that also delivered strong subscriber and revenue growth. But I think the heart of your question is really around YouTube, and that is the heart of the revenues in that line. So it continues to be very strong. We see a lot of take up in it, strong subscriber growth, really pleased with it. We did note that growth on that line decelerated due to anniversarying this YouTube TV price increase, but at the heart of it are people interested in the subscription offerings, and is the take up significant. We're really pleased with it.
Thank you.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Hi, everybody. Just two questions on the AI CapEx. So it looks like from the outside, at least, that the hyperscaler industry is going from kind of an underbuilt situation this time last year to better meeting the demand with capacity right now to potentially being overbuilt next year if these CapEx growth rates keep up. So do you think that's a fair characterization? And how are we thinking about the return on invested capital with this AI CapEx cycle? And then related to that, do you think that the AI industry is close to or far away from hitting some kind of wall on foundation model improvement in AI training based on like lack of availability of new data to train on? Just your thoughts on that would be great. Thank you.
Thanks, Ross. I think great questions. Look, obviously we are, at an early stage of what I view as a, very transformative area, and in technology, when you are going through these transitions, aggressively investing upfront in a defining category, particularly in an area in which, in a leveraged way, cuts across all our core areas, our products, including search, YouTube, and other services, as well as fuels growth in cloud and supports the innovative long-term bets and other bets. Is definitely something for us makes sense to lean in. I think the one way I think about it is when you go through a curve like this, the risk of underinvesting is dramatically greater than the risk of overinvesting for us here. Even in scenarios where, if it turns out that we are overinvesting, these are infrastructure which are widely useful for us. They have long, useful lives, and we can apply it across, and we can work through that. But I think, not investing to be at the frontier, I think, definitely has a much more significant downsides. Having said that, we obsess around every dollar we put in. Our teams work super hard, and I'm proud of the efficiency work, be it optimization of hardware, software, model deployment across our fleet. All of that is something we spend a lot of time on, and that's how we think about it. To your second question, on how do the scaling laws hold? Are we hitting on some kind of wall or something? Look, I think we are all pushing very hard, and there's going to be a few efforts which will scale up on the compute side and push the boundaries of these models. What I would tell is, regardless of how that plays out, I still think there is enough optimizations we are all doing, which is driving constant progress in terms of the capabilities of the models. And more importantly, taking them and translating into real use cases across the consumer and enterprise side. I think on that frontier, I think there's still a lot of progress to be had. And so, we are pretty focused on that as well.
Thank you.
Our next question comes from Stephen Ju with UBS. Your line is now open.
Okay, thank you so much. So, Sundar, I guess to ask the AI question a different way, as we talk to some of the model builders out there, it looks like the initial use cases are more on the cost savings or efficiency side. But when do you think we'll start thinking about products that can help revenue generation for the Fortune 500, Fortune 1000 companies, which is probably something that can hopefully create greater value over time versus just cutting costs? And Philip, listening to what will be, I guess, Ruth's final comments on YouTube on these public calls, and thank you, by the way, Ruth, for all the help. I couldn't help but notice that the bigger factors were brand followed by direct response. And, if we continue to think that the one you bring up first is the larger factor, and tying this into your prior commentary about shopping being an important consideration, like when do you think we'll start talking about direct response being a much bigger contributor to YouTube's growth versus brand? Thank you.
So on the first part of the question, look, I think, the technology is horizontal enough. It can apply on both sides. If you take a use case like improving the customer service experience, there's a part of it which is driving efficiencies, and you can look at it from a cost standpoint. But you could also be overall improving the experience, improving conversion, driving the funnel better, and so increasing basket size if you're a retail e-commerce player, etc. So we are seeing people experiment across both sides, and and so I think you will see it play out across both sides. Philip, on the second one.
Yes, on the second one, look, on the direct response side, as you know, it's about driving and converting commercial intent. And customers are obviously benefiting from including video in their AI-powered campaigns. Could be PMax, could be demand gen, and obviously using our automated tools to enhance and create video creatives. And we're very, very optimistic about this path. On average, advertisers who run both image and video ads with demand gen campaigns see 6% more conversions per dollar than those running image-only ads in discovery. And this is just one little example of how this can obviously boost your performance business. So that's a big part. The brand side, as you know, Google AI continues to make it easier for brands to show up next to the content where viewers are obviously the most engaged. And they're finding it, as you can see from the numbers, a very effective way to drive awareness and consideration. And we're also quite excited about some of the recent launches on the YouTube shopping side, if you want to put that into the direct response bucket.
Okay, thank you.
And our last question comes from Justin Post with Bank of America. Your line is now open.
Great. I'd like to ask a couple of areas. First, on the cloud acceleration, would you characterize that as new AI demand helping drive that year to date, or is that more of a rebound in just general compute and other demand, or is AI really moving this forward and helping drive acceleration? And then I wanted to ask about your internal cost savings, which has been really strong. How are you using AI internally to help cut costs? Are you seeing better efficiencies with your engineers? And just would love to hear about how you're applying AI to cut your own costs. Thank you.
Great. Thank you for that. So overall, we're, as both Sundar and I said, we're very pleased with the results in cloud. And there is clearly a benefit as the cloud team is engaging broadly with customers around the globe with AI-related solutions, AI infrastructure solutions, and the generative AI solutions. I think we noted that we're particularly encouraged that the majority of our top 100 customers are already using our generative AI solution. So it is clearly adding to the strength of the business on top of all that they're doing. And just to be really clear, the results for GCP, the growth rate for GCP is above the growth for cloud overall. And then I'll turn it to Sundar on the cost saving point, but just one point, we're really pleased as well that cloud's margin improved as it did. And in part, that reflects the revenue strength that they delivered and all of the efficiency efforts that I've already spoken about. But looking ahead in Q3, we do expect the same seasonal pattern that you saw last year with respect to margin, and we are continuing to invest in the business.
Look, I think specifically, if the question is about engineers and coding, et cetera, we definitely want to be on the cutting edge there. I think we are making these tools available to some of the most productive engineers and demanding engineers out there, and they are definitely kicking the tires hard. But I would say it's still all in very early stages. I think particularly when it comes to writing high quality, secure code. But I think all the learnings, what we are gaining here will translate into our models and products. And that's the virtuous cycle, which I'm excited by. So there's a lot more to come.
Great, thank you.
Thank you, and that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our third quarter 2024 call. Thank you, and have a good evening.
All right. Stocks kind of down a little bit after hours. Anything you heard there, Neil? That was interesting.
Mostly boring, which, okay, fine. I mean, it's quite a big company. So if something was happening, we probably heard it before. But they said they're investing another $5 billion into Waymo. So,
that was surprising. Yeah.
Especially since they're reporting the same day as Tesla. So that's an announcement to make. And I believe the stock is down a little bit, probably because of margins for this year. Pixel release and depreciation will impact Q3 margins. Other than that, YouTube missing a little bit. They said that's because the comparison was a bit more difficult. But other than that, I mean, everything seems to be great at Google. Could use some more excitement during the call, but then again, what do I care? As much as they print more money, I'll be happy.
Yeah, I kind of think we're at the part of the bull market this year where you just don't want to give up your gains. And Google's up 32% year to date. In Q2 at least, they were not going to put up some incredible numbers that pumps to 200 or 240 or whatever. So option sellers won today versus option buyers. I mean, if you bought calls or puts, probably not printing too much. If you sold calls or puts, you're doing a lot better. Same thing with Tesla. It's down 3.85%. We'll see what happens after the call, but it seems like the volatility historically that exists around these bigger names in Q2, it's not there. And that might signal a boring Amazon, Meta, Apple earnings as well, maybe even NVIDIA, as the market just keeps the gains that they gave to these companies, but they don't necessarily sell them off right now.
Yeah. I mean, for Tesla, while they were talking, the main negative point is the automotive gross margin X credits.
Yes.
That's 14.6%, down from 16.4% last quarter and 18.1% year over year. Not great. Not great. Hopefully we'll get more info on that on the call. Credits were also quite a lot for the quarter, but there was also a $622 restructuring costs for this quarter. So maybe that can cancel it out a little bit. But yeah, some questions need to be answered in the call.
Yeah. Again, nothing too crazy. The $5 billion in Waymo was interesting on the day of Tesla, but also we'll see what Elon has to say as we get into the call. It's just nothing. I mean, it's down 4%, but it's just not a massive move up or down for Tesla. Numbers definitely sucked on Tesla in certain areas like margins, but energy definitely was better than expected and greater than what people thought it could be. So now it's just a question of if Elon can paint us a pretty story. So we got about 30 seconds into the call. Any expectations on what you think Elon will end up going with?
To be honest, it's more about the analyst questions that I'm worried about, because, I mean, he will answer based on what the question is. And previously, the questions weren't always the best ones. So hopefully some better questions. But other than that, I truly hope he focuses on answering those and not just talking about whatever. But first, we'll get the say questions, which some of them are fine, but some others are. It's like the Palantir ones, like when dividends. What?
Yeah, asking for a dividend from Palantir is the stock's up 70% year to date, and people want a dividend. It's like, okay, all right. Yeah, I think he'll say something about Optimus, something about FSD. I don't know if he can pump it the way he did at the earnings call, or not there, the shareholder meeting. But we'll see what he ends up saying here today. All right.
Good afternoon, everyone, and welcome to Tesla's second quarter 2024 Q&A webcast. My name is Travis Axelrod, Head of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q2 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So to recap, we saw large adoption acceleration in EVs, and then a bit of a hangover as others struggle to make compelling EVs. So there have been quite a few competing electric vehicles that have entered the market, and mostly they have not done well, but they have discounted their EVs very substantially, which has made it a bit more difficult for Tesla. We don't see this as a long-term issue, but really as fairly short-term. And we still obviously firmly believe that EVs are best for customers and that the world is headed for a fully electrified transport, not just of cars, but also of aircraft and boats. Despite many challenges, the Tesla team did a great job executing, and we did achieve record quarterly revenues. Energy storage deployments reached an all-time high in Q2, leading to record profits for the energy business. And we're investing in many future projects, including AI training and inference, and a great deal of infrastructure to support future products. We won't get too much into the product roadmap here because that is reserved for product announcement events. But we are on track to deliver a more affordable model in the first half of next year. Really, by far, the biggest differentiator for Tesla is autonomy. And in addition to that, we have scale economies, and we're the most efficient electric vehicle producer in the world. So, anyway. While others are pursuing different parts of the AI robotics stack, we are pursuing all of them. This allows for better cost control, more scale, quicker time to market, and a superior product. Applying not just to autonomous vehicles, but to autonomous humanoid robots like Optimus. Regarding full self-driving and robotaxi, we've made a lot of progress with full self-driving in Q2, and with version 12.5 beginning rollout, we think customers will experience a step change improvement in how well supervised full self-driving works. Version 12.5 has 5 times the parameters of 12.4 and will finally merge the highway and city stacks. So the highway stack is still, at this point, is pretty old. So often the issues people encounter are on the highway, but with 12.5, we finally merged the 2 stacks. I still find that most people actually don't know how good the system is. And I would encourage anyone to understand the system better to simply try it out and let the car drive you around. One of the things we're going to be doing just to make sure people actually understand the capabilities of the car is when delivering a new car and when picking up a car for service, to just show people how to use it. and just drive them around the block. Once people use it at all, they tend to continue using it. So it's very compelling, and then this, I think, will be a massive demand driver. Even unsupervised full self-driving will be a massive demand driver. And as we increase the miles between intervention, it will transition from supervised full self-driving to unsupervised full self-driving, and we can unlock massive potential in the fleet. We postponed the sort of robotaxi or the sort of product unveil by a couple months, where it's shifted to 10/10, so the 10th of October. And this is because I wanted to make some important changes that I think would improve the vehicle, the sort of the robotaxi, the main thing that we're going to show, and we're also going to show off a couple of other things. So moving it back a few months allowed us to improve the robotaxi, as well as add in a couple other things for the product unveil. We're also nearing completion of the south expansion of Giga Texas, which will house our largest training cluster to date. This will be an incremental 50,000 H100s plus 20,000 of our hardware 4 or AI5 Tesla AI computer. With Optimus, Optimus is already performing tasks in our factory, and we expect to have Optimus production version 1 in limited production starting early next year. This will be for Tesla consumption. It's just better for us to iron out the issues ourselves. But we expect to have several thousand Optimus robots produced and doing useful things by the end of next year in the Tesla factories. And then in 2026, ramping up production quite a bit. And at that point, we'll be providing Optimus robots to outside customers. That'll be production version 2 of Optimus. For the energy business, this is growing faster than anything else. We're really demand constrained rather than production constrained. So we're ramping up production in our US factory, as well as building the Megapack factory in China that should roughly double our output. Maybe more than double our output, maybe triple potentially. So in conclusion, we're super excited about the progress across the board. We're changing the energy system, how people move around, how people approach the economy. The undertaking is massive, but I think the future is incredibly bright. I really just can't emphasize just the importance of autonomy for the vehicle side and for Optimus. Although the numbers sound crazy, I think Tesla producing at volume with unsupervised FSD, essentially enabling the fleet to operate like a giant autonomous fleet, and it takes the valuation, I think, to some pretty crazy number. ARK Invest thinks on the order of $5 trillion. I think they're probably not wrong. And long-term Optimus, I think, achieves a valuation several times that number. I want to thank the Tesla team for strong execution and looking forward to exciting years ahead.
Great. Thank you very much, Elon. And Vaibhav has opening remarks as well.
Thanks. As Elon mentioned, the Tesla team rose to the occasion yet again and delivered on all fronts with some notable records. In addition to those records, we saw our automotive deliveries grow sequentially. I would like to thank the entire Tesla team for their efforts in delivering a great quarter. On the auto business front, affordability remains a top of mind for customers, and in response, in Q2, we offered attractive financing options to offset sustained high interest rates. These programs had an impact on revenue per unit in the quarter. These impacts will persist into Q3 as we have already launched similar programs. We're now offering extremely competitive financing rates in most parts of the world. This is the best time to buy a Tesla. I mean, if you're waiting on the sidelines, come out and get your car. We had a record quarter on regulatory credits revenues and as well. On net, our auto margins remain flat sequentially. It is important to note that the demand for regulatory credits is dependent on other OEMs' plans for the kind of vehicles they're manufacturing and selling, as well as changes in regulations. We pride ourselves to be the company with the most American-made cars and are continuing our journey to further localize our supply chain, not just in the US, but in Europe and China, as well for the respective factories. As always, our focus is on providing the most compelling products at a reasonable price. We have stepped up our efforts to provide more trims that have estimated range of more than 300 miles on a single charge. We believe this, along with the expansion of our supercharging network, is the right strategy to combat range anxiety. Since the revision of FSD pricing in North America, we've seen adoption rates increase meaningfully and expect this to be a driver of vehicle sales as the feature set improves further. Cost per vehicle declined sequentially when we remove the impact of Cybertruck. While we are experiencing material costs trending down, note that there is latency on the cost side, and such reductions would show up in the P&L when the vehicles built with these materials get delivered. Additionally, as we get into the second half of the year, it is important to note that we are still ramping Cybertruck and Model 3 and are also getting impacted by varying amounts of tariffs on both raw materials and finished goods. While our teams are working feverishly to offset these, unfortunately, it may have an impact on the cost in the near term. We previously talked about the potential of the energy business and now feel excited that the foundation that was laid over time is bearing the expected results. Energy storage deployments more than doubled, with contribution not just from Megapack, but also Powerwall, resulting in record revenues and profit for the energy business. Energy storage backlog is strong. As discussed before, deployments will fluctuate from period to period, with some quarters seeing large increases and others seeing a decline. Recognition of storage gigawatt hours is dependent on a variety of factors, including logistics timing, as we send units from a single factory to markets across the world, customer readiness, and in case of EPC projects on construction activities. Moving on to the other parts of the business, service and other gross profits also improved sequentially from the improvement in service utilization and growth in our collision repair business. The impact of our recent reorg is reflected in restructuring and other on the income statement. Just to level set, this was about $622 million of charge, which got recorded in the period. And I want people to remember that we've called it out separately on the financials. Sequentially, our operating expenses, excluding such charges, reduced despite an increase in spend for AI-related activities and higher legal and other costs. On the CapEx front, while we saw a sequential decline in Q2, we still expect the year to be over $10 billion in CapEx as we increase our spend to bring a 50K GPU cluster online. This new cluster will immensely increase our capabilities to scale FSD and other AI initiatives. We reverted to positive free cash flow of $1.3 billion in Q2. This was despite restructuring payments being made in the quarter, and we ended the quarter with over $30 billion of cash and investments. Once again, we've begun the journey towards the next phase for the company, with the building blocks being placed. It will take some time, but will be a rewarding experience for everyone involved. Once again, I would like to thank the entire Tesla team for their efforts.
Great. Thank you very much, Vaibhav. Now let's go to investor questions.
All right, here we go.
The first question is, what is the status on the Roadster?
With respect to the Roadster, we've completed most of the engineering, and I think there's still some upgrades we want to make to it, but we expect to be in production with Roadster next year.
Great.
It'll be something special. Like a Hall of Famer, I think.
Fantastic. The next question is about timing of robotaxi event, which we've already covered. So we'll go to the next question. When do you expect the first robotaxi ride?
I guess that's really just a question of when do I expect the first, when can we do unsupervised full self-driving? It's difficult, obviously, my predictions on this have been overly optimistic in the past. So, I mean, based on the current trend, it seems as though we should get miles between interventions to be high enough that it should be far enough in excess of humans that you could do unsupervised possibly by the end of this year. I would be shocked if we cannot do it next year. So next year seems highly probable to me based on simply plus the points of the curve of miles between intervention. That trend exceeds humans for sure next year. So, yeah.
Thank you very much. Our third question is, the Cybertruck is an iconic product that wows everyone who sees it. Do you have plans to expand the cyber vehicle lineup to a cyber SUV or cyber van?
I think we want to limit product announcements to when we have a specific product announcement event rather than earnings calls.
Great, thank you. Our next question is, what is the current status of 4680 battery cell production and how is the ramp up progressing?
Yeah. 4680 production ramped strongly in Q2, delivering 51% more cells than Q1, while reducing COGS significantly. We currently produce more than 1,400 Cybertrucks of 4680 cells per week, and we'll continue to ramp output as we drive costs down further towards the cost parity target we set for the end of the year. We've built our first validation Cybertruck with dry cathode process made on our mass production equipment, which is a huge technical milestone, and we're super proud of that. We're on track for production launch with the dry cathode in Q4, and this will enable cell costs to be significantly below available alternatives, which was the original goal of the 4680 program.
Great.
Thank you very much. The next question is, any update on Dojo?
Yeah, so Dojo, I should preface this by saying I'm incredibly impressed by NVIDIA's execution and the capability of their hardware. And what we are seeing is that the demand for NVIDIA hardware is so high that it's often difficult to get the GPUs. There just seems this, I guess I'm quite concerned about actually being able to get state-of-the-art NVIDIA GPUs when we want them. I think this therefore requires that we put a lot more effort on Dojo in order to ensure that we've got the training capability that we need. So we are going to double down on Dojo, and we do see a path to being competitive with NVIDIA with Dojo. And I think we kind of have no choice because the demand for NVIDIA is so high, and it's obviously their obligation essentially to raise the price of GPUs to whatever the market will bear, which is very high. So I think we've really got to make Dojo work, and we will.
Great. The next question is, what type of accessories will be offered with Optimus?
Optimus is intended to be a generalized humanoid robot with a lot of intelligence. So it's like saying, what kind of accessories would be offered with a human? It's just really intended to be able to be backwards compatible with human tasks. So it would, use any accessories that a human would use. Yeah.
Thank you. The next question is, do you feel you're cheating people out of the joys of owning a Tesla by not advertising?
We are doing some advertising. So,
Yeah.
want to say something?
Yeah, I'll say something. Our fundamental belief is that we need to be providing the best products at a reasonable price to the consumers. Just to give you a fact, in US alone in Q2, over 2/3 of our sales deliveries were to people who had never owned a Tesla before, and which is encouraging. We've spent money on advertising and other awareness programs, and we have adjusted our strategy. We're not saying no to advertising, but this is a dynamic play, and we know that we have not exhausted all our options, and therefore plan to keep adjusting in the later half of this year as well.
Great, thank you very much. The next question is on energy growth, which we already covered in opening remarks. So we'll move on to the next one. What is the updated timeline for Giga Mexico, and what will be the primary vehicles produced initially?
Well, we currently are paused on Giga Mexico. I think we need to see just where things stand after the election. Trump has said that he will put heavy tariffs on vehicles produced in Mexico. So it doesn't make sense to invest a lot in Mexico if that is going to be the case. So we kind of need to see where things play out politically. However, we are increasing capacity at our existing factories quite significantly. And I should say that the cyber taxi or robotaxi will be produced here at our headquarters at Giga, Texas.
All right, thank you.
Sorry, as will Optimus towards the end of next year for Optimus production version 2. The high volume version of Optimus will also be produced here in Texas.
Great, thank you. Just a couple more. Is Tesla still in talks with an OEM to license FSD?
There are a few major OEMs that have expressed interest in licensing Tesla Full Self-Driving, and I suspect there will be more over time, but we can't comment on the details of those discussions.
All right, thank you. And the last one, any updates on investing in xAI and integrating Grok into Tesla software?
I should say that Tesla is learning quite a bit from xAI. It's been actually helpful in advancing Full Self-Driving and in building up the new Tesla data center. Regarding investing in xAI, I think we'd need to have a shareholder approval of any such investment. But I'm certainly supportive of that if shareholders are. But I think we need to vote on that. And I think that there are opportunities to integrate Grok into Tesla software. Yes.
All right, thank you very much. And now we will move on to analyst questions. The first question comes from Will Stein from Truist. Will, please go ahead and unmute yourself.
Great, thanks so much for taking my question. And this relates a little bit to the last one that was asked. Elon, I share your strong enthusiasm about AI, and I recognize Tesla's opportunity to do some great things with the technology. But there are some concerns I have about Tesla's commercialization, and that's what I'd like to ask about. Specifically, there were some news stories through the quarter that indicated that you redirected some AI compute systems that were destined for Tesla instead to xAI, or perhaps it was to X, I'm not sure. And similarly, a few quarters ago, if you recall, I asked about your ability to hire engineers in this area, and you noted that there was a great desire for some of these engineers to work on projects that you were involved with, but some of them weren't at Tesla. They were instead at xAI, or perhaps even X again. So the question is, when it comes to your capital investments, your AI R&D, your AI engineers, how do you make allocation decisions among these various ventures, and how do you make Tesla owners comfortable that you're doing it in a way that really benefits them? Thank you.
Yeah, I mean, I think you're referring to a very like an old article regarding GPUs. I think that's like 6 or 7 months old. Tesla simply had no place to turn them on. So it would have been a waste of Tesla capital, because we would just have to order H100s and have no place to turn them on. So it was just this wasn't a let's pick XAI over Tesla. There was no the Tesla data centers were full. There was no place to actually put them. We've been working 24/7 to complete the south extension on the Tesla Gigafactory here in Texas. That south extension is what will house the 50,000 H100s, and we're beginning to move the H100 server racks into place there. But we needed that to be complete physically. You can't just order GPUs and turn them on. But no, you need a data center. It's not possible. So I want to be clear that was in Tesla's interest, not contrary to Tesla's interest. Does Tesla no good to have GPUs that can't turn on? The split second that south extension is able to take GPUs, which is really just this week. We are moving GPUs in there and we'll bring them online. With regard to XAI, there are people that only want to work on AGI. So what I was finding was that when trying to recruit people to Tesla, they were only interested in working on AGI, not Tesla specific problems, and they want to do a startup. So it was a case of either they go to a startup or and I'm involved, or they do a startup and I'm not involved. Those are the two choices. This wasn't they would come to Tesla. They were not going to come to Tesla under any circumstances. Yeah.
Yeah, I mean, I would even add that, AI is a broad spectrum, and there are a lot of things which, we are focused on full self-driving as Tesla and also Optimus. But there's the other spectrum of AI which we're not working on, and that's the kind of work which other companies are trying to do, in this case, XAI. So you have to keep that in mind, that it's a broad spectrum. It's not just one specific thing.
Yeah, and once again, I want to just repeat myself here. I tried to recruit them to Tesla, including to say, like, you can work on AGI if you want, and they refused. Only then was XAI created.
I really appreciate that clarification. If I can ask one follow-up, it relates to the new vehicles that you're planning to introduce next year. I understand this is not the venue for product announcements, but when we think about the focus, I've heard on the one hand that the focus is on cost reduction. On the other hand, you also said that the Roadster would come out. Should we expect other, maybe more limited variants, like similar to the cars that you make today, but with some changes or improvements or different, some other variability in the form factors? Should we expect that to be a significant part of the strategy in the next year or two?
I don't want to get into the details of product announcements, and we have to be careful of the Osborne effect here. So, if you start announcing some great thing, it affects our near-term sales. We're going to make great products in the future, just like we have in the past. And a story.
Great. The next question comes from Ben Kallo from Baird. Ben, please go ahead and unmute yourself.
Hi, thanks for taking my question. When we think about revenue contribution and with energy growing so quickly and, Optimus on the come, how do we think about, the overall segments longer term? And then do you think that auto revenue will fall below 50% of your overall revenue? And then my follow-up is just on the last call, you talked about distributed compute on your new hardware. Could you just update us and talk a little bit more about that, the timeline for it, and how you would reward customers for letting you use their compute power in their cars? Thanks.
Yeah, I mean, as I've said a few times, I think the long-term value of Optimus will exceed that of everything else at Tesla combined. So it's simply, you simply consider the usefulness, utility of a humanoid robot that can do pretty much anything you ask of it. I think everyone on Earth is going to want one. There's 8 billion people on Earth, so that's 8 billion right there. Then you've got all of the industrial uses, which is probably at least as much, if not way more. So I suspect that the long-term demand for general-purpose humanoid robots is in excess of 20 billion units. And Tesla has the most advanced humanoid robot in the world, and is also very good at manufacturing, which these other companies are not. And we've got a lot of experience the most experience. We're the world leaders in real-world AI. So we have all of the ingredients. I think we're unique in having all of the ingredients necessary for large-scale, high-utility, generalized humanoid robots. But that's why, my rough estimate long-term is in accordance with the ARK Invest analysis of, a market cap of on the order of 5 trillion for, maybe more for autonomous transport. And it's several times that number for general purpose humanoid robots. I mean, at that point, I'm not sure what money even means. But in the benign AI scenario, we're headed for an age of abundance, where there is no shortage of goods and services. Anyone can have pretty much anything they want. It's a very wild future we're headed for.
On the distributed compute.
Yeah, distributed compute. That seems like a pretty obvious thing to do. I think where the distributed compute becomes interesting is with our next generation Tesla AI chip, which is hardware 5, or what we're calling AI 5, which is from the standpoint of inference capability comparable to a B200, an NVIDIA B200. And we're aiming to have that in production at the end of next year and scale production in 26. So it just seems like even if you've got autonomous vehicles that are operating for 50 or 60 hours a week, there's 168 hours in a week. So you have somewhere above, I think, 100 neural net computing. I think we need a better word than GPU, because GPU means graphics processing unit. So there's 100 hours plus per week of AI inference compute from the fleet, from the vehicles, and probably some percentage from the humanoid robots, that it would make sense to do distributed inference. And if there's a fleet of, at some point, 100 million vehicles with AI 5 and beyond, because you have AI 6 and 7 and whatnot, and there may be billions of humanoid robots, that is just a staggering amount of inference compute that could be used for general purpose computing. It doesn't have to be used for the humanoid robot or for the car. So I think, that's a pretty obvious thing to say, like, well, it's more useful than having to do nothing.
All right, thank you. The next question comes from Alex Potter from Piper. Alex, please go ahead and unmute yourself.
Perfect, thanks. Wanted to ask a question on FSD licensing. You mentioned that in passing previously. Was just wondering if you can elaborate maybe on the mechanics of how that would work. I guess presumably this would not be some sort of simple plug and play proposition. Presumably an OEM would need, I don't know, several years to develop its own vehicle platform that's based on FSD. I imagine they would need to adopt Tesla's electrical architecture, compute, sensor stack. So correct me if I'm sort of misunderstanding this, but if you had a cooperative agreement of some kind with another OEM, then presumably it would take you several years before you'd be able to recognize licensing revenue from that agreement. Is that the right way to think about that?
Yes, the OEMs do not move fast. There's not really a sensor suite. It's just cameras. But they would have to integrate our AI computer and have cameras with a 360-degree view. At least the gateway, like what talks to the internet and communicates with the Tesla system, with that you need kind of a gateway computer too. So it's really a gateway computer with the cellular and Wi-Fi connectivity, the Tesla AI computer, and 7 cameras, or enough cameras to get a 360-degree view. But this will, given the speed at which the auto industry moves, it would be several years before you would see this in volume.
Okay, good. That's more or less what I expected. So then the follow-up here is, if you did sign an FSD licensing agreement with another automaker, when do you think you would disclose that? Would you do it right when you sign the agreement, or only after that multiple years has passed and the vehicle is ready to be rolled out?
I think it depends on the OEM. I guess we'd be happy either way.
Yeah, it depends on, what kind of arrangement we enter into. A lot of those things we've not ironed those out yet. So we'll make that determination as and when we get to that point.
And the kind of deals that are obviously relevant are only if, some OEM is willing to do this in 1 million cars a year or something significant. It's not if it's like 10,000 or 100,000 cars a year. We could just make that ourselves.
All right, thank you. The next question comes from Dan Levi from Barclays. Dan, please go ahead and unmute yourself.
Hi, good evening. Thanks for taking the questions. First, wanted to start with a question on Shanghai. You've leveraged Shanghai as an export center, really due to its low cost, and that makes sense. Maybe you can just give us a sense of how the strategy changes, if at all, given the implementation of tariffs in Europe. Also, to what extent your import of batteries from China into the US, how that might change given the tariffs. Thank you.
Yeah, I think I covered some part of it in my opening remarks, but just to give you a little bit more, just on the tariff side, the European authorities did sample certain other OEMs in the first round to establish the tariffs for cars being imported from China into Europe. While we were not picked up in our individual examination in the first round, they did pick us up in the second round. They visited our factory. We worked with them, provided them all the information. As a result, we are adjusting our import strategy out of China into Europe. One other thing to note is in Q2 itself, we started building right-hand Model Ys out of Berlin, and we also delivered it in the UK. And, we're adjusting as needed, but we will keep adjusting. We're still importing Model 3s into Europe out of Shanghai. And, we are still evaluating what is the best alternate to manage all this. Just on the examination by the European authorities, like I said, we cooperated with them well. We are confident that we should get a better rate than what they have imposed for now. But this is literally evolving, and we are adjusting as fast as we can with this. I would also add that, because of this, you've seen the impact that Berlin is doing more imports into places like Taiwan, as well as, UK I just mentioned. So it will keep changing, and we will keep adapting as we go about it.
Great, thanks. Yeah, thank you. As a follow-up, wanted to ask about the robotaxi strategy, and specifically the shareholder deck here notes that the release is going to be one of the gating factors is regulatory approval. So maybe you could help us understand, which regulations specifically are the ones that we should be looking for. Is it FMVSS that's standard? And then, to what extent does the strategy shift? You've done with FSD more of a nationwide, no boundary approach. Is the robotaxi approach one that's more geofence, so to speak, and is more driven by a state by state approach?
I mean, our solution is a generalized solution, unlike what everybody else has. If you see it like Waymo and whatnot, they have a very localized solution that requires high density mapping. It's quite fragile. So, their ability to expand rapidly is limited. Our solution is a general solution that works anywhere. It would even work on a different Earth. So if you rendered a new Earth, it would work on a new Earth. So there's capability. I think in our experience, once we demonstrate that something is safe enough or significantly safer than human, we find that regulators are supportive of deployment of that capability. It's difficult to argue with if you've got a large number of, if you've got billions of miles that show that in the future unsupervised FSD is safer than human. What regulator could really stand in the way of that? They're morally obligated to approve. So I don't think regulatory approval will be a limiting factor. I should also say that the self-driving capabilities that are deployed outside of North America are far behind that in North America. So with version 12.5 and maybe 12.6, but pretty soon we will ask for regulatory approval of the Tesla supervised FSD in Europe, China, and other countries. And I think we're likely to receive that before the end of the year.
Thank you.
Which will be a helpful demand driver in those regions also.
Thank you.
Just to add to that, Travis, in terms of as Elon said, in terms of regulatory approval, the vehicles are governed by FMVSS in the US, which is NHTSA, which is the same across all 50 states. The road rules are the same across all 50 states. So creating a generalized solution gives us the best opportunity to deploy in all 50 states reasonably. Of course, there are state and even local, municipal level regulations that may apply to, being a transportation company or deploying taxis. But, as far as getting the vehicle on the road, that's all federal, and that's very much in line with what, Elon was just suggesting about the data and the vehicle itself.
And to add to the technology point, the end-to-end network basically makes no assumption about the location. Like you could add data from different countries and it would just perform equally well there. There's almost close to zero US specific code in there. It's all just the data that comes from the US.
Yeah, to that end, Ashok, it's we can go as humans to other countries and drive with some reasonable amount of assessment in those countries. And that's how you design the FSD software.
Yeah, exactly.
Great, thanks guys. The next question comes from George from Canaccord. George, please go ahead and unmute yourself.
Hi, everyone. Thank you for taking my questions. Maybe just to expand on the regulatory question for a second, and I could be comparing apples and oranges, but GM canceled their pedalless, wheelless vehicle. And according to the company this morning, their decision was driven by uncertainty about the regulatory environment. And from what we understand, and again, maybe I'm wrong here, but the robo-taxi that has been shown, at least in images of the public, is also pedalless and wheelless. Is there a different regulatory concern just if you deploy a vehicle like that that doesn't have pedals or a wheel, and that may that be different from just regular FSD on a traditional Tesla vehicle? Thank you.
Well, obviously, the real reason that they canceled it is because GM can't make it work, not because of regulators. They're blaming regulators. That's misleading of them to do so, because Waymo is doing just fine in those markets. So it's just that their technology is not up to par.
Right. And maybe just as a follow-up, I think you mentioned that FSD take rates were up materially after you reduced the price. Is there any way you can help us quantify what that means exactly? Thank you.
Yeah, I mean, we've shared we've seen a meaningful increase. I don't want to get into specific because we started from a low base, but we are seeing encouraging results. And the key thing here is, like Elon said, you need to experience it, because words can't describe it till the time we actually use it. And that's why we are trying to make sure that every time a car is getting delivered, people are being showed how this thing is working, because when you see it working, you realize how great it is. I mean, just to give you one example, so again, there's a biased example, but I have a more than 20-mile commute into the factory almost every day. I have 0 interventions on the latest stack, and the car just literally drives me over. And especially with the latest version, wherein we're also tracking your eye movement, the steering wheel nag is almost not there, as long as you're not wearing sunglasses.
Well, we're fixing the sunglasses thing. It's coming soon. So you will be able to drive. You'll be able to have sunglasses on and have the car drive.
Yeah.
But there's a fair number of times I've talked with smart people who like live in New York or maybe downtown Boston and don't ever drive, and then are asking me about FSD. I'm like, you can just get a car and try it. If you're not doing that, you have no idea what's going on.
Thank you. The next question comes from Pierre from New Street. Pierre, please unmute yourself.
Hey guys, thank you for taking my question. So it's on robotaxi again, and I completely get it that with a universal solution, we will get like regulatory approval. We get there eventually, clicking up miles and compute, etc. And my question is more, how you think about deployments? Because I'm thinking once you have a car that can drive everywhere, that can replace me, it can replace a taxi. But then to do the ride-hailing service, you need a certain scale. And that means a lot of cars on the road. And so you need an infrastructure to just maintain the cars, take care of them, etc. And so my question is, are you already working on that? Do you have already an idea of what like your plan to deploy looks like? And is that like a Tesla only plan, or are you looking at partners, local partners, global partners to do that? And I'll have a quick follow-up.
Yeah, this would just be the Tesla network. You just literally open the Tesla app and summon a car, and we send a car to pick you up and take you somewhere. We'll have a fleet that's, I don't know, on the order of 7 million that are capable of autonomy soon. In the years to come, it'll be over 10 million, then over 20 million. This is immense scale. And the car is able to operate 24/7, unlike the human driver. So the capability to, like, there's this basically instant scale with a software update. And now this is for a customer-owned fleet. So you can think of that as being a bit like Airbnb. Like, you can choose to allow your car to be used by the fleet, or cancel that and bring it back. It can be used by the fleet all the time. It can be used by the fleet some of the time, and then Tesla would share in the revenue with the customer. But you can think of the giant fleet of Tesla vehicles as like a giant sort of Airbnb equivalent fleet, Airbnb on wheels. I mean, then, you know, in addition, we would make some number of cars for Tesla that would just be owned by Tesla and be added to the fleet. I guess that would be a bit more like Uber. But this would all be a Tesla network. And there's an important clause we've put in every Tesla purchase, which is that the Tesla vehicles can only be used in the Tesla fleet. They cannot be used by a third party for autonomy.
Okay. And do you think that scales like progressively, so you can start in a city with just a handful of cars and you grow the number of cars over time, or do you think there is like a critical mass you need to get to be able to offer like a service that is of competitive quality compared to what like Uber would be typically delivering already?
I guess maybe I'm not conveying this correctly. The entire Tesla fleet basically becomes active. You know, this is obviously, maybe there's some number of people who don't want their car to earn money, but I think most people will. It's instant scale.
Thank you. Our next question comes from Colin from Oppenheimer. Colin, please unmute yourself.
Sorry about that, guys. You know, I've got two questions around energy storage. You know, with the tight supply and the stationary storage, can you talk about your pricing strategy and how you're thinking about saturation in given geographies, given that, you know, some of these larger systems are starting to shift wholesale power markets in a pretty meaningful way quickly?
So yeah, I mean, you know, we are working with a large set of players in the market, and you know, our pipeline is actually pretty long, and there's actually a long end in terms of where you enter into a contract to where delivery starts happening. And so far we have good pricing leverage, and I'll have Mike chime in on this too.
Yeah, I mean, there's a lot of competition from Chinese OEMs, just like there is in the vehicle space. So we're in close contact with our customers and making sure that we're remaining competitive in where they're needing to be competitive to secure contracts to sell power and energy in the markets. We had a really strong contracting quarter and continue to build our backlog for 2025 and 2026. So we feel pretty good about where we are in the market. We realize that competition is strong, but we have a pretty strong value proposition with, you know, offering a fully integrated product with our own power electronics and site level controls. So
yeah, and again, the aspect which people do not fully understand is that there's also a whole software stack which comes with our Megapack.
Right.
And that is a unique proposition which we have, which is only available to us, and we're using it with other stuff too. But that gives us a much more of an edge as compared to the competition.
Yeah, we find customers that they can sort of put together a hodgepodge solution, and then sometimes they'll pick that solution, and then that doesn't work, and then they come back to us.
yeah, and we're not really seeing saturation for, like, on a global scale. There's little pockets of saturation in different markets, but we're more seeing that there's markets opening up given demand on the grid just continues to increase more than anyone expects. So that just opens up markets, you know, really across the world in different pockets.
Yeah, I mean, just even on the AI compute side, right? These GPUs are really power hungry, and the amount of, you know, new pipeline which we're getting for people for data center backup and things like that is increasing at a pretty large scale.
Yeah.
Thanks so much. And then the follow-up here is around the 4680 process technology, you know, and the roll-to-roll process. You know, there's some news around your equipment suppliers. You know, can you talk about how far along you are in potentially qualifying an incremental supplier around some of those critical process technology steps?
Yeah, I can talk about that. as you're probably referring to the lawsuit that we have with one of our suppliers. Look, I don't think this is going to affect our ability to roll out 4680. We have very strong IP position in the technology, and the majority of the equipment that we use is in-house designed, and some of it's in-house built. And so we can take our IP stack and have someone else build it if we need to. So that's not really a concern right now.
Yeah, I think people don't understand just how much demand there will be for grid storage. They really just, like, the people, I think, are underestimating this demand by probably orders of magnitude. So that the actual total energy output of, say, the US grid is, if the power plants can operate at steady state, is at least 2 to 3 times the amount of energy it currently produces. Because there are huge gaps. There's a huge difference in the from peak to trough in terms of energy or power generation. So in order for a grid to not have blackouts, it must be able to support the load at the worst minute of the worst day of the year, the coldest or hottest day, which means that for the rest of the time, the rest of the year, it's got massive excess power generation capability, but it has no way to store that energy. Once you add battery packs, you can now run the power plants at steady state. Steady state means that basically any given grid anywhere in the world can produce, in terms of cumulative energy in the course of a year, at least twice what it is currently producing. In some cases, maybe 3 times.
All right, thank you.
This is a very profound thing.
Thank you, Elon. The next question comes from Colin Langan from Wells Fargo. Colin, please unmute yourself.
Oh, great. Thanks for taking my questions. Do you hear me?
Yeah.
Yeah. Oh, okay, good. Sorry. I guess we're going to ask, if Trump wins, there's a higher chance that IRA could get cut. I think, Elon, you had commented online that Tesla doesn't survive on EV subsidies. But wouldn't Tesla lose a lot of support if IRA goes away? I think Model 3 and Y get IRA help for customers, and I think your batteries get production tax credits. So just one, can you clarify if IRA ends, would it be a negative for your profitability in the near term? Why might it not be a negative? And then, any framing of the current, support you get IRA related.
Big question.
I guess that there would be like some impact, but I think it would be devastating for our competitors, but and it would hurt Tesla slightly. But long term, probably actually helps Tesla. That would be my guess. Yeah. But and I've said this before on earnings calls. The value of Tesla overwhelmingly is autonomy. These other things are in the noise relative to autonomy. So I recommend anyone who doesn't believe that Tesla will solve vehicle autonomy should not hold Tesla stock. They should sell their Tesla stock. If you believe Tesla will solve autonomy, you should buy Tesla stock. And all these other questions are in the noise.
Yeah, I mean, I'll ask this just to clarify a few things, that at the end of the day, when we are looking at our business, we've always been looking at it whether or not IRA is there. And we want our business to grow healthy without having any, subsidies coming in, whichever way you look at it. And that's the way we have always modeled everything. And that is the way internally also, even when we're looking at battery costs, yes, there are manufacturing credits which we get, but we always drive ourselves to say, okay, what if there's no IRA benefit? And how do we operate in that kind of an environment? And like Elon said, we definitely have a big advantage as compared to our competition on that front. We've delivered it, and you can see it in the numbers over the years. Like, so there is, you cannot ignore the fundamental sides of the business. And then on top of it, once you add autonomy to it, like Elon said, it becomes meaningless to even think about the short term.
Okay. I think that's unfortunately all the time we have for today. We appreciate all of your questions. We look forward to talking to you next quarter. Thank you very much and goodbye.
All right, Neil. What are your raw thoughts? What do you think?
My God.
That kind of sucked, I'm not gonna lie.
We should not have gone back to back Google and Tesla earnings call. That was painful.
Tesla's now down 7.18%. Overall thoughts on the call. Do you think Elon did a good job?
No, I just tweeted out, if he doesn't want to be on the call, he shouldn't be on the call, because definitely this was an Elon again. Maybe like you tweeted out, the conversation with Jordan Peterson was a bit too much. But yeah, at time, especially at the end, he's a bit annoyed with all the same questions, but he needs to understand that not everyone invests in the next 10 years, especially not Wall Street. So repeating the same thing over and over again, it's about autonomy. It's about autonomy when you don't actually answer the actual question that gets asked, right? Like the IRA credit might be removed if Trump and JD Vance become going to the White House. I know we got a non-answer there, or a short answer that he already wrote on X, that it's going to hurt their competitors more and not Tesla, etc., etc. Fine. We did get some information about Dojo, so they're going to double down on that because the demand for NVIDIA chips is so high and they need a lot of chips. So okay, we'll see if they can be competitive there. Advertising, they said that 2/3 of their sales in the quarter were to people that never had a Tesla. I'm not really like cheering about that. Of course, it has to be 2/3. I mean, how many people have Teslas today? Not that many people on a grand scale of things. So would be surprised if it were repeat buyers. I still think that 1% or 0.5% of revenue could be spent on advertising. Super Bowl, you've got in 2026, you've got the World Cup. I really hope that they can advertise there. And yeah, other than that, 4680 cell production, good. Some good info there. FSD licensing agreement, still the same thing. And when will they announce it? They don't know. Either when they sign the contract or when it actually starts to work. But they did say that they're not going to choose like a small player, only a player that wants to implement it into millions of their car, which means probably, I mean, I wouldn't be surprised if it's BYD, because they have millions of cars that are actually high tech. It's Chinese, so okay, we'll have to see how they'll do that. Last thing here, they're likely to receive regulatory approval to launch FSD in other markets like Europe and China by the end of the year. So that's quite promising. I had my first FSD experience when I was in the States 2 weeks ago. Mind-blowing stuff to see a car drive itself. Of course, there's a driver in the seat, but still doesn't touch the steering wheel, doesn't touch the brakes, went from one point to the other, no interventions. First time seeing it. I mean, it's true that if you're not in the car, you're not experiencing it, then you're not going to believe it and you don't know what the thing actually is. But it's pretty cool. It's pretty cool, and I do see it happen like on the grand scale. I mean, you have Waymo that does it as well without a driver. A bit different, but I mean, it will work out. When? I don't know. Probably not later this year because he's always late, but he delivers.
Yeah, so I have a couple thoughts as well. I think overall the energy was boring, was not exciting. I don't know what happened to Elon. I don't know if he's just like, he doesn't care that it's Q2. Maybe it's not an exciting quarter, which, I mean, Q1 and Q4 are really what matter. Q2 and Q3 are just kind of a grind. But energy was not there. It was not exciting. And I don't know. It makes you kind of wonder why the stock went from 130 to 230 if this was going to be the earnings, because we didn't really see anything that was that interesting or different than we heard from before. A couple quotes from Elon. Elon, when asked about Trump winning and getting rid of subsidies, it would suck for our competitors, but long term it helps us. Our value is autonomy. If you don't get that, sell Tesla stock. So doubling down on the statement that autonomy is all that matters, definitely making the transition from deliveries and margins to autonomy, even if the street doesn't believe in that yet. His argument as the CEO is that you should only judge us based on if we solve this. If we don't solve this, we go to zero. If we do solve this, then we do well. Then this part was really weird for me. He said, we are currently paused in Mexico. I think we need to see just where everything stands after the election. Trump has said that he would put heavy tariffs on vehicles produced in Mexico. So it doesn't make sense to invest a lot in Mexico if that's going to be the case. Kind of saying, hey, we can't really build out our gigafactory if Trump wins, which to me is a bit bearish if Trump wins. Obviously, if other EV companies die because they get rid of the subsidy, that only propels Tesla. But Elon openly admitting that if Trump wins, then it makes no sense to do certain things, which is definitely, it makes you think about kind of what deal does he actually have with Trump. He also said robotaxi event is going to be 10/10 officially from 8/8. Hopefully that does happen on 10/10. Yep. But overall, it was down 7% or up 7%. I could have seen it both ways. But I think the energy on the call, Elon not really having the same level of excitement he had on shareholder day, that's probably why it's tanking.
Yeah. And on the Mexico thing, to be honest, it doesn't matter that much right now because they have so much unused capacity in their existing factories that they can use. So Mexico doesn't matter much right now. Plus, I'm pretty sure that they can work out a deal with the administration saying, look, we're not a Chinese company, we're a US company, so we're going to use US material or whatnot. You can tax us, maybe tax us less, etc., etc. I'm sure they can find out a way to work it out. He's a big employer in the United States, so I doubt they would want to screw him over. Plus, I think I'm sure that he will get invited to the White House a little bit more if Trump and JD Vance win the election. But yeah, we'll see. We'll see what happens. But yeah, the 10/10 event could be interesting. He said that he wanted to improve certain things about the vehicle and show off a couple of extra things. So let's see what that's about. Hopefully, he's still keeping the bar quite low with the expectations and actually over delivers. But yeah.
Do you think there's any reason why Nvidia is down? Did he say anything about Dojo that could cause this or no?
I mean, he did say something about Dojo, but then on the other side, he said the demand for Nvidia is extremely high, so that should have canceled it out. So yeah, I don't know. There's also, I think Meta is also down.
Meta. Where's Google?
That might be about.
Google's down 2%. Meta is down basically 2% as well.
Yeah, so maybe everything is down after hours a little bit. Fine. I mean, it's not like we're not being green throughout the whole year, almost. So small pullback after hours. Plus, it's only the start of earnings season, so we ain't seen nothing yet.
Yeah, Enphase, one of the only green names after hours. Everything else kind of taking a breather. And again, I think my overall thoughts here that Google and Nvidia and Tesla, they've run so much this year, not just year to date, but from their bottoms, that in Q2 we're kind of in the dog days of the year. If things are not amazing, which they shouldn't be in Q2, it should be kind of just standard, then stocks will pull back a little bit.
So, yeah, I mean that's fine. I mean, the whole market has been going up relentlessly, actually. So small breather. Plus, there is some election uncertainty, especially in the last 10 days or so. So the market doesn't like uncertainty. So we'll see what happens. But overall, I still fully expect not to see big tech companies have a horrendous quarter. Maybe Apple might surprise, but even them, I think services will be up a lot. They'll buy back billions of shares, increase dividend a little bit, and then voila, and be good. But Tesla, I don't know. Elon didn't have the energy for the call again.
Yeah, no, I agree. The call had very little energy. And
that's the mic.
Yeah, the mic was weird, right?
And half the time, the CFO or whatever couldn't understand half a word he was saying.
Yeah, this was an interesting one, folks. I wouldn't be surprised to see Tesla take another gap down in the morning, or this dip get eaten up, because the numbers themselves were not bad. I mean, they were not the best, but Elon's energy, I think, is what really tanked the stock. A lot of, the stock moves literally with how Elon's words operate. But I could see the dip getting eaten up tomorrow. I could also see it, taking a little bit of breather. It'll be interesting to see the upgrades or downgrades tomorrow after this call. Elon didn't give too much clarity to the analysts on specific questions they had. He kept saying this is not a product, call. But I guess we're just going to have to see how quick FSD really rolls out. He did reiterate again that FSD, autonomy, that's why you invest in Tesla. He said a couple quarters ago, it's the difference between Tesla being worth 0 and $1 trillion. So that's why you're buying, if you're buying.
Yeah. I mean, if you look at the questions, barely any real question. I mean, there were some, but most of them are fully focused now on AI, robotics, and stuff like that, and a lot less on actually the car business. So
it's almost like he's trained the analyst to ask him
exactly
about, like, other things.
That's probably why we're at 200. Well, we were at 246. We're now at 228. That's probably why the 200-day moving average is at 203. So could we revisit it? I don't know. But yeah, the analysts are definitely trained to ask more AI, FSD types of questions and less about how many cars do you think you will sell next quarter. So
I would agree. All right, guys, I think that's it for us. If you have not followed Couch Investor on YouTube, I'm putting him in the chat right now. His Twitter is also in the description. So please make sure to subscribe to him.
Thank you.
And we will see what happens. Tomorrow after the bell, we have... Tomorrow's Wednesday. Or nothing really big tomorrow after the bell. Thursday, we have Amazon, do we? No, we don't. Oh.
I think it's next week.
Okay, cool. So nothing... I mean, there's some more companies this week, but today was the big day. Tesla not the best. Google a lot better. Both stocks flat to down after hours. All right, that's it. Thank you, everybody. I'll see you guys live tomorrow on the market open at 8:45, and we'll see you on the next one. Thanks, Neil, for joining.
Bye-bye.
Bye, everyone.